they're doing stuff and spending big. If you're the Yankees, you got to go out and spend big as well.
Yeah, right now it feels like silence. The only time there's some juice is when Sonny Gray takes him out on the other side of the rivalry. Sonny the Liar Gray.
That's yes. Although, like that being said, you can't expect a guy like, after he gets traded to a team, be like, yeah, at the press conference, I I just don't want to be here. Like you gotta like, that's this whole situation though.
There's that you got the A's bullpen coach. Apparently, he told him, "Get me out of Oakland. I want to go to the Yankees." And then when he didn't get traded at the 2018 deadline, he told broadcasters, like, "Well, guess what? I never wanted to be here." Okay, petulant teenager. We'll see how this goes this season. We'll head to the Red Sox now. But the Red Sox 18, our friend wants to know Charrington noise. King JB, Red.
I think that these types of documents need to also include things like imagination and creativity, rather than, pushing like a bulldozer where you're going to encounter opposition and you're going to be wasting resources on fights that you probably shouldn't fight anymore.
I guess overall the document makes a lot of sense. Though. If you want to adjust to multipolarity, if you're in the United States, that is, if you can't be everywhere at the same time, what do you do? Well, first you want to make sure that you're the boss in your own neighborhood, that is in the Western Hemisphere, which is why this revival of the Monroe Doctrine makes sense. Not that one has to support it, but it makes sense. China will then, in this multipolar system, be the main rival for economic leadership. So obviously this is where it's a bit confrontational. But instead of being too ideological, looks at the economics of it. Russia, of course, doesn't make any sense. In the unipolar world, you would push the Russians towards the Chinese. In the multipolar, you can try to bring them over to our side of the ledger, but then you have to end the Ukraine war. So again, this makes sense to Europeans. They become, go from a key ally to being increasingly a burden. And you foresee this civilizational or continued decline, economic, social, all of this. So essentially, telling them that this has to be reversed. We will help you to do so, irrespective of what your leaders want. A lot of this makes sense, though, if you see that the U.S. has to do something to adjust to these new realities, especially when you see the excesses of the liberal ideology as preventing these changes from being made. But I guess that's my last question, though, is given that you focus a lot on multipolarity, how did you interpret it in a similar way, or how do you see multipolarity motivating some of this new document?
As I read it, I think that multipolarity is at the core of this document, because it explicitly rejects U.S. role as a global hegemon, as unsustainable, as overly costly. The document even takes an explicit swipe at free trade. And there's even mention of Alexander Hamilton, which is, a message between the lines of even changing the model of economic governance. And so and explicit statements that the administration wants to make the United States into an industrial superpower, a producer. Well, if you're going to be a producer and an exporting power, then you need markets. And if you need markets, then you need a large number of, let's call it, affluent consumers in the world. And in that sense, I believe that the American strategy is actually complementary to the Chinese strategy, because the Chinese strategy is to create affluent markets, to lift.
All right, let me get to work. Okay, hello everyone. Let me try to set up here. Oh, I see. That's why I have no room for files. Take some of that down. makes sense. Sorry, I'm just cleaning up a little bit so I can show you things. Okay, let me get back to say hello to everyone. Hey, Pat, how are you? Good to see you. Hola, upa, umpapa to you, Pete. Hey, Jim, how are you? Hola, Adlap, hola, my good friend. I forgot to sign in. I don't know the price. Railtown, okay, he's down one day, but this will all be actually, like to quote Bruce Springsteen, when we look back, it'll all seem funny. Maybe not. Look, it's terrible, but let's get the price. Okay, Railtown is 31 to 31.6, last trade 32. So they want to keep the price under the last trade. They want you to think there's stock for sale. There isn't any. I mean, I can think of one guy that might be selling, but there's no real stock for sale. Last trade, 200 shares. So right now it's slightly in the green, but by the time they see I'm live, they'll get it in the red. I don't think the chart looks good. I'll show you what chart. Holidays are coming up. So if any material information is actually put out on the airwaves for the public to see, no one's going to be at any trading desk stacked on it. You've got Tony the tiptoeing tiger, the timid tiger, telling you, look, he works for the shorts. Please, if you want to listen to him, go listen to him. He's the guy that told you to buy. His advice helped Roger Cohen over at AME or GMC, one of those, build up his cash pool. Who does Tony the Tiger work for? Not for you. Does Tony have a value of the company in mind? Let's go over what we think the value of the company is. Let's ignore that fudster. But he's saying, just to put it on the record, my understanding is he's saying the stock will be 80 cents to $1, maybe as high as $1.50 in 18 months. The guy's out of his gourd. But there's method to his madness. He wants you to sell the stock to help his buddies. He certainly doesn't want you to buy a lot of stock, although maybe he couches it in, it'll be a good trade for the year. I mean, it is in the history of the markets, buying a stock at 32 cents and holding it for a year and a half, and it goes up 5x or 3x, that's a good trade. But he has no basis for those numbers. None. Where's he coming up with them? The charts don't tell him that. He's just making it up. Now, what I've tried to give you is some tools that you can take a pad of paper and you can come up with your own targets. And let's go through that. We'll go through that today. But this morning with Railtown, the stock I see a low of 30 cents here. It actually traded at 0.2999 this morning on the opening. The first trade that I saw, level, whatever level this is, level 1, 3,000 shares at 0.30. And then the next trade was 3,000 shares at 0.2999. So that was a total of 6,000 shares reflected on the time and sales, but the volume said 54,000 shares. So guys and girls, this continues to be short sellers and computerized trading. 90-some% of all trades in America are made by computers. That's why Ken Griffin can sell all of his property in Chicago at a loss and build a $2.5 billion office down in Florida from scratch, because he is making his money stealing from you. For some reason, the policy decision in America is that Ken Griffin deserves to make tiny little bits of every single trade in America because he's such a good guy. He doesn't provide any service to anyone except the shorts and the big pools of money who benefit from his trading. He's just a parasite. But everyone louds him because, hey, he's rich. When are we going to stop just every time we see somebody with wealth, we go, well, they're great. Most of the time it's luck. But I'm telling you, the rich are no different. Well, they are different in their ability to make choices in their life. You know, they can pay their bills and take their breaks and have some influence. But as human beings, they're no different than anybody else. Every single day with Railtown, there's always 52,500 shares for sale. Always. That is a manipulated price. And apparently Tony, the tangoing tiger, is telling you that unlike some YouTubers who predict $55, I've been right. He's just a arse. He's a pompous arse. He got his degree in economics. It's worthless. You know how I know that? I got my degree in economics. It's a bunch of crap. But we all, you know, the world goes with this Keynesian and then Friedman's monetarism, and now it's all dismal. I guess it trains you to think. Not in Tony's case. Doesn't give him any ability to think. Unless he's just working somebody else's agenda. But if you want to listen to him, you're going to miss your chance to make it out of here. Now, I've been wrong for 6 months. Well, June. I guess that's 6 months. Let me just look and add it up. I don't want to exaggerate. So June, 1, 2, 3, 4, 5, 6, 7 months. We're in the 7th month. So for 7 months, my urgency has been incorrect. My sense that the market would reflect the value of Railtown for we're in the 7th month. I've been wrong for 7 months. And if you want to be even more accurate, I think the first time I mentioned this stock as a trade, which got interrupted by the AIP acquisition, was a year ago, possibly over a year ago. And I've been dead wrong. Absolutely dead wrong. I think the stock today is cheaper than what you could have paid for it 1 year ago. It may be ahead of what you paid for it in June, but almost certainly the majority of you paid more for this stock than where it's trading today. So in that sense, I've been totally wrong. Totally wrong. But that's if you believe that market price is telling you anything. Let me say it differently. If you're judging me on the price of the stock, there's a lot to fault me for. But if you're judging me on the fundamentals and the opportunity to invest in a software development company with, it sounds like, transformational exposure to AI, on the cusp of, in my judgment, which I think should be your opinion, on the cusp of huge valuations, then the story's not over yet. And we now have 16,100,000 shares of Railtown, 16,100,000 shares of Railtown. And obviously this isn't audited or anything. That's a hell of a lot of stock. So one good thing, if we can hang together, is we have more shares than I think anybody except for Corey and for Marwan. We might find out that Dr. Tom Core has a lot. I don't know. But based on the information we know today, we're the big institution. We're the big holder of this stock. And that is great, my friends. That is great. If you want to continue to be stuck in this living hell of these kind of manipulated stocks, listening to people like Tiny Tony, go listen to them, but you'll never get away from it. You'll never get away from it. I know it's unpleasant to listen to me sometimes because I go off on tangents and I'm not allowed to notice patterns of behavior and try to use those as an assessment of explanation of things. And I'll do my best not to do that because the world has changed. And I'm sure it's for the better. Doesn't matter. It's the one we live in. I suggest to you that rather than looking at this stock and being sick every day, rather than looking at this stock and hoping it skyrockets, you should look at this as an opportunity to buy more shares. That's my opinion. And add to your position or establish a position. but you shouldn't be shaken out of it. I'm sure some of you are going to see the end of the year and you're going to say, that's it. Time's up. I gave it a year. Any stock that can't do, any management can't do anything in a year, I'm out. Well, that rule of thumb may work, I guess, but it's just arbitrary. It's not based on anything. It's not based on anything that is going on with the company. We have, if you don't count today, we have, starting tomorrow, we have 1, 2, 3, 4, 5, 6 more days to the annual meeting. I think that's good news because I think the company will put out information before the annual meeting that could change our perception from just listening to me of what's going on. I'm not sure anything that the company does for the rest of the year is going to get the stock price dramatically higher. Now, it could, sentiment can change on a dime. All you need is one buyer, but we're running out of time. I think the company clearly has it sounds like a very small staff doing everything. So you could argue, well, how are you going to run $1 billion company with 3 workstations? True. My argument is you're not. You're gonna bring in the revenue, you're gonna prove the concept, and then Microsoft's gonna buy you, and Microsoft's gonna be putting everybody through. That's my opinion. So my argument that the company is probably going to be sold sooner than later dovetails with that skepticism that, hey, how do you run $1 billion company with 3 workstations? That doesn't address, my understanding is the company has 2, maybe even 3 floors of an office building full of software engineers. That's completely different. But 3 workstations to handle the paperwork, like filing, a monthly report, and they're probably older guys like me. It would take me all day, 2 days to file a report. Print it out, edit it, review it. So there's been a little bit of a bottleneck that we've already experienced. But it seems to be continuing, to me anyway, in the sense that any of the current owners, which according to AI, I don't know if it's accurate, Highlander Partners, Vanguard Group, Texas A&M Management, BlackRock, I don't know if it's true, but I showed it to you. And then Mavericks and Omers, these kind of people, they still can't buy because there's material information that hasn't been disclosed. I would argue one of the biggest pieces, what the heck is the deal with TELUS? Sure, we got an announcement, and it's great. Guys, did you really expect that news? Of course, you've never heard of TELUS, but TELUS is one of the largest telecoms in Canada. And, that's pretty big deal. And they have 2 data centers, state of the art, sovereign, battleships almost, aircraft carriers that are going to attract all of the ragtag companies of Canada under their umbrella. But we don't know what the deal is. We don't know. I'm not sure they're going to show us specifics on revenues, but the regulators surely have a standard which will allow the company or TELUS to disclose some information without giving away corporate secrets, so that material information, full disclosure, is had, and then you can see buying. My guess is revenue is going to go through the channel of research like major companies do. That's why they have whisper numbers, and they give you targets, and then the earnings come out and the analysts are surprised, supposedly. So I think a lot of that will go through research. Well, we're now on December 8th. And let's say tomorrow the company announced that TELUS's revenue is going to be big, and it's great and it's awesome and life is grand, but they don't tell us what it is. We're going to wait until our earnings announcement in January. I'm making it up. So they start talking to analysts. And analysts can draw their own conclusion because analysts know how to interpret sales contracts, number of users, growth, multiples, and they can extrapolate revenues. But let's say they made some announcement tomorrow, and it probably wouldn't do much to the stock. It'll go up 10 cents, 15 cents. But it's not going to give the loud numbers that I think would have happened at a different time in the year. There's no worse time in the market normally, other than August, than December for price activity and gains and people at the desks. So if it happened tomorrow and they had a series of Zoom calls, and then they got the annual meeting next week they have to get ready for, you might not get research out. I think this capital research could come out before the annual meeting, but I'm talking about a Canaccord piece or a Fidelity piece or a whom the hell piece. You might not get it out till the 3rd or 4th week of December, if then. Well, institutional brokers are probably on vacation. Institutional desks are probably covered by the sales assistants or the sales associates. If they do bother calling into an institution, it's going to be a ghost staff. There won't be an investment committee to make it. I'm not going to give you my reasons why, but there's been a great shift in top levels of all corporations, not at the ground level, not at the ditch digging and the bricklaying and the fighting of wars and the, drilling of wells and building things and serving in war armies, and not in any of that unpleasantry, electricians. But at the top, there's been a great revolution. And with great revolutions come cultural changes and changes in expectations for lived experiences and living my best life and doing it all and balancing feelings and handling everything. Because we know the people doing it before couldn't do it. So, what does it mean? It means a lot of vacation time. There's going to be a lot of people away from their desks. And most portfolios are balanced, they're settled for performance. The bonuses for 2025 have already been created. The measurement of performance is pretty much locked in, and it's almost an agreed coasting period, so everybody can take a bit of a break before they get back to competing in January. So unfortunately, I don't see a whole lot. It's not impossible. It's not impossible, but I don't see a whole lot that's going to cause buying to come in enough size to offset the computerized program selling and offset perhaps year-end tax loss selling, and perhaps to offset, if it's happening, the selling of shares in order to exercise warrants, which, by the way, helps us. Look, there's two sides of these coins. The good side of both of those coins is if people are selling shares to exercise warrants, that's the cash that keeps the company from having to go to Jeff Easton or Kurt Kramer or Ari Rubenstein. So they don't have to go do a toxic financing. That is really, really good. Really, really good. The second thing, the company runs lean, has run lean, at least in terms of its overhead. It's not top heavy. It's not top heavy with corporate suites and corner offices. And I love what I heard here, that they work at 3 workstations. There's not a lot of arrogance up there, which means, again, they don't spend money at such a pace that they have to take toxic financing. That is great for us. But the other side of the coin is it took them 10 months to close AIP. I mean, it could be as simple. I showed it to you yesterday. They had 113 new shareholders in that offering from a couple years ago at AIP. And they, in their paperwork, they said they were going to get unanimous consent for this transaction. I don't know, unfortunately, for sure. But if they needed blue ink on a bunch of pages, getting 113 people to do anything can be quite time consuming. So, but we've already been through that delay. Now, Tony Twinkle Toes the Tiger wants you to think that the stock price is telling you something, and somehow he's been correct in his calls. All it's telling you, he understands very well that the shorts just keep on selling. And you can look at it today. The bid now is 29.7. Let me show you a couple of things quickly. Let me show you a couple of things. Because I have to show you what I see. And here's the, let me take Eric's comment down. Here's the chart, and it doesn't look good in the short run, But that's all we have right now. Just doesn't look good. And this is what happens when there's no news and you save money on attorneys. I'm sure they're great attorneys. I'm sure the best ones were assigned to the case. I'm not making that argument, but it took a lot of time. If you come back to the beginning of this chart, for the entirety of this chart, the company has been in a period of time where they have not disclosed material information. This chart starts in February. This high right here is probably when they announced they were going to acquire AIP, but then it had said MOU, it said acquisition, it said Canaccord Genuity, it said in 3 or 4 weeks we'll get an LOI. So the shorts just destroyed it. And since then, and it all runs through Canaccord, I'm sure, the selling has never stopped. We may have had some impact in the middle of the page on the rally, or it happened in Canada, regardless of our trading in the United States. But that didn't scare them. They let it run up and they sold it right back down. And we are within a heartbeat of hitting that support, as I see it, at 27.5 cents. There's no reason it won't go there. Will that be enough? Or does it have to go down and touch essentially the lows made in March and April? I don't know. It's possible, but I have a feeling 27.5 cents is what they're going to try to do. I don't see anything in this chart that is a bullish pattern. I don't see a wedge. I don't see anything bullish in it. But that doesn't mean that, just like here in the middle of the chart, back here in May when they collapsed it down, May 19th maybe, that doesn't mean the stock can't turn around and have a huge multi-week run higher. And it can happen just like that. But you gotta, if you're gonna watch it every day and listen to people like Tony Two-Step, your stomach is going to be in your throat. I think what we have to do is just recognize, well, the company didn't get material information out for the entirety of this chart, which is 10 months. The company hasn't gotten any material information out. But there are some good things. For example, they closed AIP under budget in terms of shares, and now it is closed. So that's great news. But the buying's not here yet in Canada. And I would argue to you it's high. I would think it would be exceptional, and it's possible, but I don't think we psychologically can plan on buying over the next 3 weeks. That's December. And then you got the New Year's holidays. So we might have to gut it out for 3 to 4 weeks. But the setup for what happens in January, February, March is amazing. It's amazing. They have closed the AIP deal. So anyway, I'm sorry about this chart, but it's not the end of the world. It's just you got to accept what it says. I also want to show you this. This morning, the stock, and I'm sure it's happening now, but just this morning, the stock traded in Canada at 41 cents. 41 cents in Canada, whatever that says, not as of 9:30, market open, 41 cents up in Canada. Well, if you put that into a calculator, 41 cents Canadian, it equals 29 cents 69 United States dollar. So a lot of the selling that's going on is this high frequency arbitrage that's so important to make Ken Griffin rich and others like him. But it's just high frequency trading. It's not telling you anything about the fundamentals of Railtown. But of course, the company's not telling you anything either, which is delightful. I called all weekend. I called Friday. I called this morning, shared text messages. And I think with sincerity, people close to the company intend to give me updates. But I haven't gotten anything yet. I haven't gotten anything in 5-6 weeks. So, I guess we can sulk about that or get pissed off about it or say that it's like I do, that it's giving the algorithmic and the computerized trading a chance to just press the bet ever lower. That's the path of least resistance. When there are no buyers, just keep pressing it down. So we're allowing these guys to make thousands, tens of thousands maybe with the cross-border arbitrage every day or week. But that's just life. We know about it. We've learned about that. The company has closed the AIP transaction, which is a beautiful deal. The company did it without taking on toxic financing, which is enormously important to our value. And the company doesn't need any capital. So we can survive snowman season. We can get through it. But I'm not saying it's fun. I'm also not saying that I've been correct in my calls. I've been totally wrong about the urgency of this play this year. And I'm not going to try to defend myself on that. I've just been wrong. But I would like to go through with you something that Tony Two-Face the Tiger, pretending to be on your side, but really working, in my judgment, for his friends, the short sellers, or he's just an idiot, which either way, he's not on your side. And I use him as an example. There's plenty of people on that side of the fence, and I want you to avoid them. This is a tough investment because the price is doing exactly what it needs to do to make us question our judgment, make us feel like, this is just like GTII, which is absurd. But on the other hand, you heard about GTII on this channel, you're hearing about this on this channel, and ipso facto, it must just be like GTII. Seems like shorthand to success, doesn't it? Seems like shorthand to avoiding another GTII. But there is really good news under the surface here. And I have a feeling some of it's going to come out before next Wednesday. I don't know when I'm ever going to hear from anybody at the company. I think the responses have been sincere, but on the other hand, I come up empty-handed. I have nothing to show for it. So I can't really give you new information, and all I can give you is my sense of things. But before I answer some more of your comments, I'd like to go through some of the things that we learned so you, over the next few weeks, these times that could try men's souls over these next few weeks, you can do it every morning. You can do it. Start with a new sheet of paper and just do it over and over again. Be as critical as you can. We now know yesterday that fully diluted, I showed it to you from the monthly update and the last filing of options and warrants. So it's approximate. It's an approximate number. But we now know that the number of shares fully diluted is 225 million. We now know that. In my calculations, I'm going to show you now, I expand the number of shares to make up for the fact that we don't quite know the exact number. But that 225 is approximately 194 million that they disclosed as their outstanding shares in Friday's monthly update. I showed it to you, and maybe I'll show it to you again. And then adding about 31 million for warrants and employee options. So we know that. We know that the AIP deal is closed. And the only reason that's important is we know this number is not going to be expanded by Jeff Easton, Ari Rubenstein, Kurt Kramer, or anyone like that. We know that. We know the company is bringing in We know that the company's bringing in 500 to $1 million and sometimes more in capital every month, primarily from the data that we see. It's primarily from warrant exercises. But this is great. It means this number will not be unduly expanded. Okay, so we know those things. Obviously, we know the company isn't disclosing anything. We don't know exactly why, but my guess is they have to get financials done before the annual meeting. Could be that. Maybe they're creating a corporate presentation before the annual meeting. Maybe they're negotiating some final enterprise sales agreements before that meeting. Don't know. We'll find out. But we do know that the company is still in this period of time that doesn't have a good enough name for it, but that this shares are under constant selling pressure from computerized selling, flash boy selling, to help the Ken Griffins of the world get rich. And we can't do anything about it for now. We know that there is no buying from institutions, and we know there's really no research, institutional or retail. There's no research. And we know that the one exclusive investment banker, Canaccord Genuity, it's still, we assume it's still on their restricted list. So we know the other bankers up in Canada haven't heard the story. And we know that the holiday season is coming right now. And that most desks are going to be run by ghost staff. Most decision makers are going to be skiing or sunning somewhere. So we know all this. But we're going to still look at the stock price every day and say, oh my gosh, it's telling us something. We can't help it. We're human. Well, I think what it's giving you is a great chance to buy the stock, build a position. If you can just accept that things are going to be better starting with the second week of January, and a lot of the upside is going to be concentrated in those first weeks and maybe the first 2 months of the new year, all things being equal with the stock market, it's going to be pretty exciting. All right, so why is Railtown a good investment? Why is Railtown so special? And why have we've already discussed that. We already know why we have been given such an opportunity. And I suggest to you, it's because of the short selling and the crushing that goes on in North American markets, combined with the ineffectual closing of the AIP deal in I don't want to say timely because we don't have all the facts. It could be that it's all those 100 signatures delayed it. But we do know it took 10 months to close. And so we're paying a price for that. But the stock price is down. And it's also a public company instead of a private channel. So we get the opportunity to buy it. We don't get the chance to buy any shares of Langchain. We didn't get a chance to buy that. It's already in the Wall Street maw. So we already know why it's available to us. But why is it a good opportunity? Well, I think it's kind of a hybrid in, and it could be its own category too, but it is a company in the software development space and it's in the AI space. The two founders of Railtown got together 6 years ago, and because of their 30 years of experience in building and developing and selling and creating client relationships and dealing with the breakdown of software and the bugs that can destroy weeks and months of work and cost a lot of money, and the legacy costs of upgrading software, they knew all of that intimately. So they got together and said, why don't we solve this problem? Hey, I'm in, let's do it. And further, because they knew the trends in the industry, they knew the Moore principle, why don't we set this up as a self-learning AI tool, an independent AI tool, early on, before NVIDIA creates the massively quantum leap, massively powered chips that will power AI 2.0. So they started early. Well, now this year, not last year, this year, on Wall Street, AI became all the rage. You'll hear it with the charm boys getting you in G-Bucks because it's AI. It's a buzzword in some cases. But what happened in that? Multiples went up from 12x to as high as 200x. There's an arms race. It's undeniable. Facebook, Meta, Alphabet, Google, NVIDIA, Oracle, governments, others are pouring billions and billions of dollars into developing what James Altucher nicknamed AI 2.0. Other people out there are calling the software development market now software development 2.0. Multiples have gone through the roof, and they're based on one single metric, revenues. But they're not, even though Tony, the dense tiger, says so, doesn't make it true. They are not based on waiting for revenues to be booked. You don't wait 6 months, 9 months, 18 months for revenues to be proven. That's not where the multiples are coming from. The multiples are coming from if you can show a projection of revenue, particularly if you can show revenue growing on a reverse ski slope, growing on a hockey stick, growing at an algorithmic ratio. The multiples come from your projections of revenues, annual recurring revenue, and it's massive. On top of these companies and others putting money in building the data centers, building the energy, buying the NVIDIA chips, on top of that, the large companies, we can call them hyperscalers, we can call them the Mag 7, but Mag 7 doesn't include all of the companies. But basically, any company in the software space who runs a search engine, runs a community like Facebook, runs a contact mechanism, emails, and data like Google, runs sales, runs online interfaces for movies or ticket selling. All of it is going to be replaced by a quantum leap in computer power and AI power that we don't even understand any more than I did when I used to have to hustle down the block, 3.5 blocks, to get a fax sent from Merrill Lynch. Well, actually, I was at a different, by then I was at a different company, which is now RBC Dane Rauscher. I didn't know about fax machines, but I had to go to a settlements company. I could use their fax machine, punch in a number, and you'd listen, you hear that and send faxes to New York. Otherwise, we were limited by the overnight envelope. But I had no idea the revolution the fax machine was going to make. I didn't understand the revolution the PC was going to make. Prior to the PC and Apple, computer was on site at firms, started to come, and we just had little terminals, but it started to come onto our desk. I couldn't have even imagined how it would change everything. And then the dot-coms changed, the internet. I mean, you guys understand it. I don't know how to use my phone to get onto aircraft. I just want my boarding pass. But they don't want to give you a boarding pass. They want you to use your phone. I don't want to use my phone. But everything's changed. Well, that's what's coming with AI. AI 2.0. Morgan Stanley, in my old office, I received research from a colleague earlier this year. And the theme from Morgan Stanley is that AI 1.0, now they didn't use that terminology, and I may be mixing some thoughts with James Altucher, but AI, the first phase of AI was getting all the data into the computers as much as possible. And this broad horizontal use of AI that you're familiar with. And you know that I'm not that well attuned to. But the second phase is using the data, using it for robots, using it for most of the white collar jobs that haven't gone to India are going to go to AI. That doesn't mean all jobs. It just means a lot of the jobs that most of us count on to enter into our fields may go to AI. Marketing, even sales. But it's gonna be a huge change in how we live. But more importantly, according to James Altucher, AI 2.0 is going to create more wealth than crypto. It'll make crypto look like a blip. That's his quote. I've shown it to you. I played it for you. He's hard to listen to. He's so self-promotional. But he also thinks that the technology change, and this is stuff he came up with this year, the technological change and the wealth opportunity is bigger than anything we've seen in 150 years. All I can think he's talking about is railroads, but he might be talking about electricity. He might be talking about oil. I don't think so. I think he's talking about the rails, but who knows? So Wall Street, in addition to these companies building out the data centers and the NVIDIA chips and all that, Wall Street is raising huge amounts of capital to fund Sequoia, who funded LangChain, to fund venture capitalists, private equity, mutual funds, retirement accounts, and ETFs, and IPOs, and new offerings. And they'll come up with all sorts of products. So there's just a wall of capital being directed to AI. And by the way, the upgrading of software to match the new AI world. Now, there was a risk about a month ago. Everyone was sick to their stomach. NVIDIA was down. AI, Burry made a bet against it. And the guy at SoftBank needed to raise money to increase another bet. Everyone's like, oh, AI's all over with. Well, it turns out that was a premature call. It may come at sometime in the future. But it looks like that amount of money is going still into AI investments from Wall Street, from retail and institutional investors. They're going to take a break for Christmas and Hanukkah and Kwanzaa and, other reasons, holidays, New Year's. But they're going to come back with a vengeance in the first and second quarter of next year. And then on top of that, these companies, Facebook, Alphabet, Oracle, they don't want to lose their relative standing. If they sleep on upgrading to AI, and if any company, a travel agency, sleeps on upgrading to AI services, or a brokerage firm, or a real estate firm, or a legal firm sleeps on it, they're going to lose business and they're going to be out of business. If Amazon sleeps on it, some other service will start delivering packages using AI. Amazon isn't sleeping on it. Facebook isn't sleeping on it. There's an arms race to acquire companies who have the product that's first to market and best in class. Well, obviously, Railtown doesn't have that because nobody's buying the stock, and because, it's obvious they took 10 months to close AIP, so they obviously don't have the product. They obviously don't have this AI software tool that they say is going to transform software development. Obviously, they don't have it because it took them 10 months to close the AI deal. And TELUS hasn't released material information explaining their relationship with Railtown, and they only have 3 workstations, so any paperwork that's done at Railtown takes longer perhaps than it should. Obviously, this company, other people have beaten it in the technology space, and they missed their window. It's obvious. The stock price is down. The shorts know. I mean, they sell everything down. Every day there's 52,500 shares on the offer every single day for the last 3 or 4 months. It's just manipulation. But obviously the price is telling you Railtown has missed the boat. They are not best in class. They are not first to market. Well, I'll tell you what. That is one big arse assumption. And if you make an assumption, you make an ass out of you and umption. You don't know that. You're just assuming it. You're pissed off. I'm not talking to anyone in particular. Tony doesn't know it. He doesn't know jack. But the stock's down to 29.8 on the bid. It's predictable. I'm talking, so they're going to push it down. They're just going to keep pushing. And of course, our pain is going to continue because that's just what it is. In the short run. In the short run. If you can zoom out and look in terms of 90 days and 6 months, these are extraordinary prices to buy the stock. Too bad William didn't tell you to wait until November and December. I didn't know. And who's to say we might not have been able to build our position in November and December? Who's to say? It, as the saying goes in America, it is what it is. So the overall background is at our favor. There is an arms race going on, so the big companies are buying technology companies. Wall Street is pouring money via different products into the space, and governments and companies are building out the infrastructure, and AI 2.0 and the quantum leap in chips is here. Now, what's unique about the software market? The software market, the spend on upgrading software is going to be over $300 billion a year. To our knowledge right now, there's one quasi-competitor to Railtown for their solution, and that's LangChain. Now, I will admit to you, technology runs at light speed, so there may be others out there we don't really know about. But there's room for everybody. I would tell you, it's my impression that Railtown's in a whole different league than LangChain, but we'll find out. LangChain can always imitate what Railtown's. There is a race there too. Can't deny it. All right, so that's the background. Now that Railtown owns AIP, and we've discussed that the metric is revenue, where is Railtown going to have revenue for the next 12 months? Not December, just right off December. But let's say in the from the second week of January onward, what's the story that Railtown's going to be able to tell research analysts, investment bankers, institutions, conferences, Zoom calls about their forward 12 months earnings? And is that going to be a fixed number, or is it just going to keep getting better and better and better? Well, let's start with what are the sources of revenue. I would say one of the sources of revenue is hosting. Hosting, you have 200 companies in the AIP network, roughly. They currently spend money elsewhere to use their software via computers, these giant computers called data centers, and they have to pay for that in order to generate revenue. I think it was Brandon that pointed out that Dr. Tom Core said that 125 companies spend 120 million on that hosting service. Well, TELUS has a brand new Virgin data center, state of the art, NVIDIA, green, with capacity to handle all that. Well, Railtown owns AIP, so obviously they're going to move that hosting to the best they can to TELUS. Why? Because there's a revenue sharing agreement. That's part of the material information that has not been released. But where is it? There's a press release out there that only the densest of us, and I'm probably the most dense, can't make the connection, but it's also in Railtown's corporate investor update. So that's one source of revenue. Well, they have 200 companies doing over 400 million gross. We know that Dr. Tom Core mentioned 125 companies doing 120 million in hosting. So maybe we don't use 400 million as our starting point, or 200 companies as our starting point. We don't even give a guesstimate. We just use Dr. Tom Core's numbers. That's one revenue source. What's another revenue source? TELUS, in their documents, in their press release, but also in this document, it's clear that TELUS needs the tools that Conductor provides to attract AI companies and end users to use TELUS, to use the data center. Now, we don't know the capacity, and we don't know if Conductor is the only tool that can be the interface. But I would say that TELUS is going to refer their existing customers best they can. It says right in here, and I'll show it if you have, I've shown it to you before, they're going to upsell to Conductor. So that hosting, TELUS is directing of customers to host using Conductor is another source of revenue, both in the hosting and also in the use of Conductor. It's hard to know what that adds up to. What's another source of revenue? Well, what about the pipeline of enterprise sales agreements that have not been disclosed over the last 10 months? There's got to be, unless they've been not working. What about the companies they've already announced that they have enterprise sales agreements with? For example, Uniserve Software. That's another source of revenue. What about new marketing efforts that bring in additional companies as enterprise sales agreements? That will be a projectable source of revenue. What about cross-selling across the 5,000 companies in the AIP network they now own for enterprise sales agreements? That'll be another source of revenue. And finally, what about rolling up the AIP network companies? In other words, acquiring the AIP network companies for stock and consolidating them in the subsidiary that has recently been created, and which Corey is, as far as I know, the sole board member at this time. We know from yesterday's presentation that I showed you, where AIP raised money with investors. It's old. It's about 2 years old, 2022, 2023. But in that presentation, AIP made it clear that they were going to put together the best of these young AI companies doing $500,000 to $10 million in revenue, and they were going to roll them up to get all sorts of benefits, just like Constellation Software. But it was interesting in there, after they reached, and again, this is a presentation 2 years old, after they reached 50 companies or thereabouts and $100 million in revenue, they were going to stop. They were going to stop. And then go public and create $1 billion company. Well, if we assume that, instead of the 400 million, instead of the 400, it's 400 million and 200 companies, maybe we just use old goals to be conservative. Well, let's look at what some of that means. And you can check with Tony Two-Step. He probably has given this a lot of thought. But you can do it yourself. You know, you don't have to follow my examples. So here we go. The top right here, the hosting referral fee. If we use 120 million, not more. The other day I was using higher numbers. Just use 120 million. And then we multiply it by an eighth. Not 20%. We multiply it by 12.5%. It gives you a referral fee of 15 million. I think that's a pretty safe, projectable 12-month number. And that over here by Lucky is 100% margin. Another way of putting it, you've got over $1 million coming in every month in cash flow. All right, and then here, in the roll-up category, acquire and consolidate, the roll-up, I didn't use 100 million. I didn't use 400 million. I just used 50 million for the next 12 months. That is a low estimate. And then you've already announced several enterprise sales agreements, but the one I focused on here is the 3,000 end users at Uniserve. If you assume right here, just 15 corporate clients sign up for Conductor at $250,000 a year. That's got to be low. That gives you $3,750,000 in 12-month revenue, forward revenue. Here, the additional enterprise sales agreements that are currently in the pipeline that we don't know about. There's got to be some. I just assumed if you go over in the middle, I assumed over the last 10 months that maybe there's 2 a month. I have no idea. That's 20 times 250. That looks like a low number. But I got, or maybe it might be a slightly high. But anyway, I came up with 6 million. I think that's a low number. They easily could have many multiples of this lined up. But I'm trying to be conservative. And then down here, I might have transposed these two numbers here because I think if you look at it, 20 times 250, yeah, I transposed these two numbers, but forgive me for that. In other words, this 5 million should be up at the additional, and the 6 million should be down here at the new ongoing. Either way, it doesn't matter where I put it. But I estimated 5 million for the additional ESAs and 6 million for the new, in the future, what they could bring in. I transposed it, but, sorry about that. All of those, the roll-up money, the press released enterprise sales agreements, primarily Uniserve, the additional enterprise sales agreements that we haven't heard about, and then the projected new sales agreements that nobody knows about yet. I estimated a 40% margin, not that it matters, but my point is they're going to have high margin revenue coming in. And then down here, other sources of revenue. The AIP companies, the 200 companies in the AIP are going to grow, and the number of companies are going to grow. So the hosting number is going to grow bigger than 120 million from AIP. Remember, this number is Tom Core's 125 companies, but I gave it 0 in this calculation. Railtown is going to cross-sell and generate enterprise sales agreements from 5,000 end users and growing, which is a huge source of revenue. I gave it 0. TELUS is going to refer not only its customers, which could create enterprise sales agreements, I left that out, but TELUS is going to refer the use of Conductor for hosting purposes, and that could be gigantic. They do 20 billion a year in revenue. Just a teensy bits of that would be huge. I gave it 0. Other hosting companies, other data centers, other sovereign AI in Canada, other new business that Railtown brings in that want to host, all could be gigantic in the future. I gave it 0. So I totaled those numbers and I came up with essentially 80 million on the blue arrow. You see the blue arrow? 80 million in revenue projectable for 2026. Now, that might slide and it doesn't matter. Remember, their fiscal year ends in September, but it might slide such that it starts, this 12 months starts in February instead of in January. But it doesn't matter. It's what Wall Street, what the bankers and the research analysts and the investors are going to project for the 12 months forward. 80 million basically. Now down here in the green arrow right here, that would be my best target, $9 a share, $9.30 a share in the first quarter. Maybe as soon as January, but I would say in the first quarter. The yellow line, what is it? I took the 79,750,000 in projected revenues and I multiplied it by 35x. Now, why didn't I use 25x? I think 25x is too low because I think the growth in revenue is going to be very rapid. If you look up here, the margin is 40%. I could argue that it should be 40x, particularly when you round in some 100% margin. Anyway, I think 35 is a better number than 25x. I think 12x is ridiculous. And 35x was the number that SoundHound generated before the sell-off. So my favorite choice to be conservative is 35x. So I multiplied 79 million by 35x. It creates a number close to 3 billion for enterprise value. And then I divided it by 300 million shares because they're going to have to issue some shares. My guess is they won't issue more than 10 or 15 million shares to buy 50 million in revenue. I don't know. But I rounded it up from 225 million fully diluted shares to 300 million. When you divide that out on the green arrow, you get a target price of value of Railtown of $9.30 a share. Now, just quickly, at 50x, it's $13.29. At 75x, it's $20 a share. And at 100x, it's over $25 a share. Now, is a 50 multiple possible? Sure. What if Telus' hosting came in not at 15 million up here for the network, but what if Telus' hosting came in at 50 million or 100 million projectable? These multiples the multiple on the 79 could leap. So these are all very possible numbers. And the 100x, is that too high? Well, currently, deals are being funded and acquired for over 100 times forward revenue. Langchain was funded at 90 times the low end of their projected annualized revenue from June, and at about 80 times the high end. So that's where you get the 75. So my target of 930, I think, is conservative because I left out a lot of revenue and I was very low, I think, in projected revenue here. Of course, I'm guessing because we don't have the numbers. But here, if you don't buy my numbers, go to the yellow, the orange arrow, and discount my numbers by 2/3. Use only a third of my calculated target, or stated a different way, assume they only get a hosting fee of 5 million next year, or that their roll-up numbers are only 15 million, or that, well, you get the point. Basically, you're reducing your 80 million down to a third of that. I can't do the arithmetic in my head, but it's basically 25 million in revenue instead of 80 million in revenue, a little more than 25 million. So if you don't like my numbers, take 2/3 off. And my January, February target of 930, use $3. That could be $4. It could be $7. It could be $9. If you compare my low end number under the green arrow at 930 to my discounted number at 100 times, that's $9. I think those are two target numbers at $9 for the first quarter. That makes my target of $9, say January, February, March, a quite reasonable and explainable number. Let me just show you one more thing and then I'll go to messages. Of course, I probably don't have it here. Darn it. I don't have it here. Well, I'll just tell it to you for now. I'll just tell it to you for now. Here's a picture. Here's a picture of Harry Truman. I won't go off on a political discussion, but this is the President Harry Truman. You see him here? Harry Truman. He recognized Israel. He's looking at a map of the Middle East. That's Harry Truman talking about the Middle East. And you'll see this country here next to Jordan, next to Syria, next to Egypt. You can see the name of it. All right, let's go to your comments. See that? That's my problem. If I talk too long using media, I lose comments. Darn it. Darn it. So, Clay, anybody before Clay, I missed your comments completely. I can't see them. I've got to get a better service. I've got to get a wife or a secretary. Oh, you're so sexist. All right, I didn't say that my wife or well, my wife would have to be female, but my secretary doesn't have to be female. But I certainly need somebody to help me. So anybody before Clay I missed, if you posted something interesting, repost it, please. If you posted shares, repost it, please. I'm sorry. So Clay, I I didn't upgrade that. Thank you for reminding me, Clay. I didn't upgrade it on the numbers, but I do remember that you did it. Congratulations. Congratulations. Also, have you heard any news on the well Nexbridge participated in southern Louisiana? We can look that up. I haven't. But we can look it up. But let me get through these before I hate it when I lose messages. Drives me crazy. So let me get down through the messages before I go looking. Giuseppe, hi, William and everyone. And just finished your informative Sunday video and boom, you're back. I used to say that to girls at bars. It always worked. It was so clever. You know, you're sitting at a bar and a couple of girls sit down next to you and they're pretty. And you figure they're going to talk to you, but they don't. And they start talking to each other. I would turn to one of them. It's so clever. I just amaze myself with my cleverness. I would tell the one girl, "Hi, it's nice to see you're back." It always worked like a charm. Ward Richardson. Good afternoon, William and RT Kroom. IBM buys Confluent, a data streaming company, an $11 billion all-cash deal. All right, I'm going to look that up. IBM buys. That's interesting. They didn't use shares. Confluent for 11 bill. All right, I'll look that up too, but not now. I'm so annoyed. Everybody, everything before 1:30 p.m. I don't see. So I'm not ignoring you. If you put numbers up, put them up again. If you put a criticism up, put it up again. If you put support up, put it up again. I just can't see it. I'm sorry. Giuseppe. Could Canaccord smile at Corey but stab him in the... Yes, absolutely. Absolutely. But you know what, Giuseppe? And that, in fairness to PJ and to one or two of you, that's certainly a concern. And it's a concern I expressed sort of anxiously when I think I'm Almost Legend called me out on it. I think it was 2 or 3 Sundays ago, maybe 3 Sundays ago. And I am convinced, and I'd have to put it at the 99% range because nothing is for sure, but I'm convinced that Canaccord did not and will not raise money for Railtown. They're not going to do a toxic deal. They will not do it. That doesn't mean that Canaccord isn't facilitating the hypothecation and rehypothecation and the selling of endless amount of non-existent shares. I would put Canaccord at the front of that. But it doesn't mean everybody at Canaccord knows about it. It just means their prime brokerage side and, you know, one or two people that give approval, maybe at the stock loan desk side. But no, Giuseppe, I think we dodged a bullet. The company is not going to do a deal with Canaccord. Now, it's possible that Canaccord will be the broker on a strategic financing. Like, for example, I'm going to make it up. Please don't hold this. But what if John Ruffalo's Mavericks came in and put in $5 million at $250 a share? Well, you know, when the stock's a higher price. As a strategic investment, that would be huge. It would be so beneficial. It would get the name everywhere. Or you know, whoever in Canada is the Bill Gates of Canada came and did it, you know, a strategic investor. And maybe Canaccord will do that. But Giuseppe, yes, to your question, Canaccord's knowledgeable officers could lie to Corey and smile at him and say, we're going to do a really good investment banking deal for you, and then give it to the toad. That's entirely up Canaccord's alley as far as I can tell. Or they'll go through a face like a Jeff Easton so they can deny. Everything's at arm's length. That's entirely possible. But it won't happen here. It's not going to happen here. I do not, of course, I can't be 100% sure. And that's, that I give credit to PJ's concern. She correctly points out, I think, one of the things she correctly points out is, you know, I have no control of what the CEO does or the board does, but I have it on pretty good information, I think, that they're not doing a deal with Canaccord. So, a toxic deal. Oh, the rest of your question is Canaccord selling non-existent shares? I don't think the company is. I don't think Canaccord is selling, but I think they process on their prime brokerage side. I bet they're the ones handling, and there's probably others. There's probably one or two others, but I bet they're handling the sales on behalf of these crappy market makers that we don't need. And, you know, here's how it happens, Giuseppe. Some group of guys gets around a desk in New York or in Toronto, and they have a wad of cash that a promoter, not a promoter, a sponsor lets them use. So they've got enough track record that the sponsor lets them have access to $20 million. And it could be Stevie Cohen, it could be the Toad, and says, go find a company to sign up for this kind of note and we'll help you. Well, that didn't happen here, thank God. But that same group of guys have these computers that they can set on stun or higher to sell non-existent shares. And they do it in every stock. Any Adina Friedman stock, any Chucky Crawwell stock, and most of the stocks in Canada, any North American stock who needs capital and is under $5 roughly, they just sell. And they use computers to do the selling. They do it like Ionic Capital, where they'll do it, they'll sell stock they don't own during the day and then buy it back and make sure the settlement is within the range of the toxic note that they got the company to sign. So technically, their attorneys can lie and say, we never short. So it's really morally black and white as far as I see it. But when you have attorneys involved and you have big pools of money involved, you have Congress corrupted and the regulators corrupted, and you have these huge lobbying budgets, and then you have the active collusion and the removal, even the burning of tickets and the lying, and you have Reg Show to hide it all behind. It's a real gray area to some people, just like the definition of is. Just like whether or not what Monica and Bill Clinton did with each other was actually relations. I did not have relations with that woman. But to me, it's black and white, morally wrong what they do. But yes, I think Canaccord they're not selling it for their own account. They accept the orders at this group of guys. Let's say it's in Burroughs Park, New York, and they're sponsored by Leo Cohen, made up the name, and they're given $20 or $30 million to play with. They have the computer, they have the attorneys, they're trained how to do it, and they start their campaigns. Well, they set up LLCs, they set up relationships, and they either buy a market maker or they go through various market makers that don't really exist. They're just set up to use Reg Show. We don't need market makers. There are no market makers anymore. They just don't exist anymore. It's just a fig leaf for this crime. But, Ann Wagner wants to protect your privacy because she's such a dimwit. So they set up the computers. In the case of Railtown, I think the computers were set up so that any company anywhere in the United States or Canada who's under $5, who announces that they've entered into a memorandum of understanding to acquire another company, and they're using Canaccord Genuity, and they're going to negotiate the terms over the next several weeks to come to a letter of intent. The computers automatically start selling in massive volume. And it goes through a so-called market maker that doesn't exist, who has a relationship with several prime brokers, including Canaccord Genuity. The boys at Burroughs Park, who are using somebody else's wad of cash, they sit, if they even go to work, they sit around a series of computers, and they start selling through an LLC or more than one LLC that they've established and they can walk away from, but is housed and gets credit and borrows shares from and can hypothecate and rehypothecate shares from the stock loan desk at Canaccord Genuity, and they put their accounts there, and they have other accounts there. Their sponsor, Leo Cohen, might put his whole hedge fund there. I'm making up the names so I don't accuse you. So they get all this preferential treatment, and then the trading isn't free. The trading generates massive commissions, particularly when it's spread across thousands of companies. So Canaccord Genuity makes a massive amount of their annual income and revenues from this fraud and theft, in my judgment. And then they charge loan fees, monthly fees. It's a huge profit center. And yes, I don't think Corey knows about it. And I'm not sure whoever Corey works with at Canaccord knows about it. This is something that you don't quite put in an email. You don't quite put it in a policy statement. But you understand it's going on because it's so much business that you can't turn it away. And as my erstwhile friend at the American Stock Exchange would say, they're good clients. Yeah, but they're breaking the law. Well, they're good clients. That's the thing. When you're a good client, things are made. So yes, I don't think Canaccord's 3,000 or 4,000 people. I'm not sure Corey is dealing with the people at Canaccord that know this is going on, number one. Number two, if he is, it might be one or two people on, out of a dozen that he interacts with. And even the people on his team don't really understand. People on Wall Street do not understand this is going on. None of my friends know this is going on. Why? Because they all started when I started. And if they're younger, they're just taught to gather assets. Nobody understands this. That's why it goes on and on and on and on and on and on and on. Even, I'm not saying you, Giuseppe, and I'm not saying anybody listening to me, but even in general, people who own Railtown, they're looking at this stock price and they're saying, oh my gosh, something's wrong. Nothing is wrong with the fundamental story. The only thing that could be wrong, the only risk that could be wrong, is the strategy of these Borough Park boys and others is to sell so much stock that it changes the per share benefit of anything good, or it busts the merger, or if the merger is going to go through, look at any of DBMM, if the merger goes through, they're going to issue 1 billion shares instead of 10 million, 50 million. It was 50 million. Well, guess what? It didn't work. The people at AIP and the people at Railtown, and in fairness, their advisors at Canaccord, were smart enough to know that just because the price came down to 49, 48, 47 cents Canadian, they didn't have to adjust the 50-cent price of the deal, because it's all about percentages. And the key was to be able to go forward with that ratio. So Giuseppe, we're past that risk. It was a real risk. And I think, in fairness to PJ and others, there's others, that awareness of that risk is justified. But we're past that risk. Unfortunately, I'm not sure the shorts are even paying attention because their computers are set on these technical indicators, these ranges, and just like with Ionic Computer, Ionic Ventures, they're just set like this morning. Sell, come out of the gate blasting, come out at $29.99, keep selling, absorb the buying, and then continue selling. Today it's in the United States, it's 151,000 shares. I doubt, I mean, I can think maybe there's some real selling, but I doubt more than 10% of that's real, so-called real. It could be arbitrage on the Canadian dollar versus the American dollar. But if they can make a penny a share on 100,000 shares, back and forth, using the dark pool, back and forth, they make $1,000. I'm telling you, it's better than working for Metro. It's better than being a food inspector. It's better than being a busboy, which is about all they're qualified to do. They are literal meatheads. But for some reason, Ann Wagner sees value in protecting your privacy so that this can continue. And it's all about money. It's trillions of dollars, trillions. Patrick Byrne gave up. I met with they all shared the job, but a friend of mine, he didn't really remember me, the CEO, president, whatever. There were 3 of them at Legg Mason a month ago. And he told me twice, find something better to do. You can't fight these shorts. Just find something better to do. But in the case of Railtown, the only way the short strategy will work, just like with any of these companies that I keep listing for you, including Finger Motion needs capital. That's the flaw. Doesn't matter how good the business plan is, doesn't matter how good the news is, if you need capital. Stevie Cohen, who I think backs up a lot of these guys, it's my opinion, but his legion of attorneys and Jeff Easton's of the world, and then the Toad, and then the Burroughs Park boys, they're going to destroy everything on a per share basis. I think Finger Motion and some of the people close to it are doing a good job of fighting back. And so far, Finger Motion hasn't issued an inordinate amount of shares, but let's see if they can keep that up. But in the case of Railtown, remember, these guys want to win in 5 minutes, in 10 minutes, in 8 hours. And they certainly want to win today, tomorrow, and before the end of the year. So they know the path of least resistance is keep dropping that bid. And they'll get trades done at $27.50. That'll happen. And you're going to go, oh my gosh, you're calling for it. I'm not calling for it. I'm not turning negative. But as long as there's no buying, and there is no buying in Canada, that is knowledgeable, with wherefore, with research, obviously somebody's buying, but it doesn't offset this shit. And it's, it's the. Did you ever see the movie Leaving Las Vegas? It was a really hot day in DC, and my house didn't have it. When I bought my house, well, even when I lost my house, it still didn't have air conditioning. It's just I installed this massive air conditioner. Took two of us to install, and then others upstairs, and I got the electric upgraded. But when I first moved in for 2 or 3, 4 years, the electric would blow out if you put too much air conditioning on it. So anyway, it was really hot, and I had a little bit of air conditioning, but just not enough. So anyway, I went up to a movie theater in the middle of the day to watch a movie just to get the air conditioning. And I went to see Leaving Las Vegas with Nicolas Cage and Elizabeth Shue. And the theater was pretty full because I think other people were doing what I was doing. But my gosh, that movie was amazing to me. I never thought I'd like it, but I found it very powerful as a love story, and the music, and it had good sense of humor. And so there's a scene, if you remember the movie, Nicolas Cage is an alcoholic. He's a drunk. And he acknowledges it. And he's also an attorney. And he decides that instead of fighting it, he's just going to go to Las Vegas until his money runs out, and literally until his liver runs out. But so he starts at I don't know where, someplace on the Strip, I guess. And predictably, his resources run down, and he has to move to a hotel, motel, Holiday Inn. So he moves to one of these motels that are really down class, and the name of the motel is the Whole, WHOLE, year, YEAR, INN. In other words, you can take long-term stays at this hotel, the Whole Year Inn. So Nicolas Cage is sitting there, a little bit lit on vodka or whatever, and he looks up at this sign while he's waiting for his turn at the front desk, and instead of it saying the Whole Year Inn, what he sees is the Whole Your Inn, the HOLEYOUR'(REIN), the Whole You're In. That's what it feels like we're just in right now. We're in a little bit of a hole here with Railtown. And what we're counting on is that the company is going to eventually, but they seem to have not the administrative staff to get around to it. They're going to eventually release the material information which will allow the regulators and the attorneys who represent major buyers to say, hey, it's okay, you can start buying. You fulfilled your responsibility to fully disclose material information, and as one of these inside knowledgeable buyers, you now can buy. But we haven't gotten to that point yet. And in fact, my understanding of it now is it's going to go via research. Possibly the revenue is going to go via research organizations. And guys and girls, we have run out of time this year. We've run out of time. I do think the next week, week and a half, 2 weeks could get really exciting. But having said that, if the stock goes up, I think those computers are going to be selling for the rest of the year. So we'll see what happens. I don't think this is a permanent affliction. I do not think it means the company is going to issue billions of shares down here like MMAT or Northwest Bio or any of these other companies that get caught in the quicksand of the American markets, who are aided and abetted by Adina Friedman, in my judgment, and Chuck E. Cheese Cromwell, in my judgment, and by Ann Wagner, in my judgment, and by the SEC, in my judgment, and by FINRA, and by Baker Hostetler and all the other white-shoed law firms up in New York, in my judgment. But, while the cat is away, the mice play. And the cat has been away for 10 months. And I don't have any control over it. But that does not mean this thing is in dire trouble. It does not mean that it's going down. It just means the bloody story isn't being told. It doesn't mean that hasn't gotten better. It doesn't mean the revenues aren't going to kick ass. I just showed you 80 million in revenues. Hell, if Railtown shows 10 million, 25 million in January of forward revenues, the company could be 1 or 2 billion in market valuation. I'm going to move on because I'll show you that market valuation. But I got to go through these comments. This is the greatest buying opportunity because the criminals continue what they do. The quasi market makers, loan desks, who were criminal in my judgment, they continue what they do because they're good clients. And the firm, because they're honest and hardworking and they don't want to jeopardize anything, they're following the rules to the T, so there's no news. The calendar is saying that it's Christmas time in Washington, and Democrats rehearse. The Republicans drink whiskey neat because there'll be no more FDRs. But we're in December. It's just how it is. So we gotta play it as the. I don't play golf, but what's the expression? You play it as it lies. That's what we got to do. But the great opportunity is we can buy more shares. My phone's too much information, but I'm trying to get my phone turned back on. This service that I have, they're going to cut it off. I'm trying to get that paid for. And I have other things I'm trying to get paid for. before my life gets quite desperate. And it's just life. It's just life. I've got to play it as it lies. But I think next year it's going to be better, you know. So Giuseppe, I went off too far. But yes, I think Canaccord Genuity is helping the shorting in the stock. But I don't think the company is vulnerable to long-term damage. Obviously, it's vulnerable to this short-term pressure, which gives us an opportunity to buy. But as soon as revenue becomes visible, projectable, and you know, it's like a backward ski slope, I think the stock can change on a dime. All you need is one buyer. We have 0 buyers. I'm not saying there aren't people building positions and all that, but I'm talking about a Mavericks or an Omers or BlackRock. You just need one buyer, and this stock is up 10x. But we're not there yet. We're just not there yet. We will get there. Giuseppe, I had 150. All right, Giuseppe, that's great. That's awesome. Both of the Clay's position is amazing. Yours is amazing. And because I'm not a jealous guy, I'm not jealous. But I am a little yellows. Ward Richardson, Confluent, major partners are Goog, Avus, Masift. They are Google, Amazon, Microsoft, Red Hat, VMware, Accenture, Mongo, Datadog, Looker, MuleSoft, Databricks. Wow. Wow. Julie Kim, another 2,000 shares at 31. Wow, Julie. Bravo. I'm not jealous of you either. You're not going to get me all jealous of your position. You're not going to get me worked up by how rich you guys are going to be. I'm very happy for everybody. Julie Kim. That's amazing, Julie. Congratulations. Congratulations to Clay, Giuseppe, and Julie today. Rick, accumulate, accumulate, accumulate. Genuflect, genuflect, genuflect. Accumulate, accumulate, accumulate. Bought 500 this morning. Good for you. Good for you, Rick. Bravo. Keith. William, hi, William. Don't they need to raise money soon to keep the operations going? Or does AIP deal bring some revenue? Thank you for commitment. Keith, I'm going to delay my answer because I don't want to lose comments. But I'll answer it. I will answer it. Can I just see if my phone works to the Wi-Fi, but it's disconnected otherwise, just to explain that. But uh, I'll get there. All right, the Mets are interested in Kyle Schwarber. Pete Alonso is meeting with the Red Sox and the Orioles. Orioles tragic, tragic, feel it happen. Blue Jays interested in Robert Suarez. Nationals drawing significant interest in C.J. Adams. Mets, Carl Edwards agreed a minor league deal. All right, that's enough on that. Let's see where the prices are. Railtown is 30.21. The bid is 29.4. The ask is 31.12. The volume is 152,000 shares. Finger is up a penny at $1.45. G-Bucks is down at 9 cents. Quantum, Bio, Gold, AI, Treasury, Coin, Pharmaceuticals is down 2 cents at $10.02. MTEN, home of the billionaires, is down 7 cents at $1.10. All right, I'll come back to that, Keith. I'm not ignoring it. Justin Babish saw Sunday's video after the fact. Thought it was great. Added RT today, 150. All right, Justin. Good for you, Justin. Bravo. We'll buy more when cash clears the account. Good for you. John Smith, Doe. The Japanese yen is described as blowing up because of its rapid depreciation and the unwinding of the massive yen carry trades, which have long been a key feature of the global markets. Yeah. We've talked about that briefly here. The carry trade is blowing up, but is it what's going to trigger some sort of mass collapse? That's yet to be seen. We also went simultaneously through a government shutdown and probably a miscalculation by the Fed on inflation, such that in general, then there's been a lot of tightening, too much tightening in the financial markets. I'm not arguing about the long-term strategy or, what medicine the market should take. But in the short run, that lack of liquidity has really affected a lot. The bond markets, the repo markets, even the stock markets. But the government shutdown ended. It looks like the Fed is ending QT. Looks like the Fed is going to be in buying bills and bonds. And I wouldn't be surprised if the Bank of Japan and the Fed are going to coordinate something, perhaps on the carry trade. But a lot of these men and women who have established carry trades almost as free money have done it with leveraged money, and they want to get paid their bonus. So some of them perhaps jump the gun to close out their positions. Others don't want the carry trade on their year-end portfolio. So when they go around and talk to clients, they can show what geniuses they are. None of them are geniuses. They're all lemmings. I mean, they have systems that most of us don't understand. They have little methods that make money, but they have to keep their clients too. So, John Smith Doe, it's possible that the blowing up of the carry trade is the thing that's going to destroy the markets around the world. But I think everybody knows about it. But it could be. It could be commercial real estate, brings down all the markets. It could be a war in Europe, brings down all the markets. It could be that silver suddenly becomes unobtainable for settlement in London. That could bring down all the markets. It could be that NVIDIA's chip is a fraud. There's all these predictions. Personally, I've never seen a predicted crash happen in the headlines. I mean, obviously Mike Burry predicted in the Big Short, but he was early. So I appreciate that you put up a non sequitur here, but I think it's about high time that the Japanese markets deal with the problems that happened 20 or 30 years ago. Maybe they've decided that there's been enough depreciation of the yen over the decades to make up for the losses that happened. I don't know. I think it was about 25, 30 years ago. I don't know. But I appreciate it, the non sequitur. Jack Hamilton, I picked up 1459 and 41. That's awesome, Jack Hamilton. You're going to catch up with Donna. And then she's not going to be able to lord it over you. But remember, she's going to do something in January. I think that's great, Jack. That's a huge position. That's a very nice position. Bravo, bravo. Justin Babish, pretty soon you can tell Railtown that we own more than Corey Brandolini. Yeah, it could be. We're not there yet. And it's going to be exciting, I think, next year. We've made it through the hard part. There's probably 2 or 3 more weeks. We got to get through the end of the year. But I think we're through the risk period. They closed the deal on Railtown under 50 million, which is the exact opposite of what the criminals were hoping. And they're not going to, I'll answer Keith's question, but they're not going to have to raise money. So we've made it through. It just, there's a little more rain to deal with, but we've made it through the hard part. Hey, Silver Skyrocket. Akira Nova. I live 35 minutes from William and Mary. So that makes you Richmond or possibly Norfolk or Chesterfield. That's pretty cool. That's a nice part of the world. I spent a long time there. No, 4 years. RPR checking in, Silver Skyrocket. Ward Richardson. The share count dropped over 500,000 shares. It was heading to 17 million. No, unless I miswrote it. It wasn't. It wasn't. It was there, 1699. And here's this is what I showed you. This is what I showed you Friday, 16051 and then 1658. I think that gentleman that said it would go to 17 million really meant that it would go to 16,100,000. We're not at sifting 17 yet. Maybe we'll get there. Hey Richard, good day, good afternoon. All my Christus money is in Railtown. I'll be giving IOUs. I know, I feel like that too. But I don't have anybody to celebrate Christmas with. I was joking with somebody. We had that gallows humor that we'll have to tell everybody that their Christmas present's going to come for Easter, you know. Yeah, I apologize for that, Richard. You could have saved money by waiting to buy now than buying in June or July. But I'm not going to make excuses. I just expected the performance in the stock price to do much better this year. Having said that, at any time, this stock could be 60 cents, $1.20, and it's not going to take 18 months. I wonder if you guys will remember that Tony Twinkletoes made such an absurd prediction that it'll take 18 months to go to 50 cents or $1, and he might have, or 80 cents to $1, 80 cents to $1, or maybe as high as $1.50. It's going to take 18 months. I hope you remember that. And then think of which side of the fence he's really on. He wants you to do two things. Be a bit impatient. And he wants to look like he's a good guy on your side. But also he wants you to get out when it goes to 1 or 150. Just don't do it. Don't do it. It's been so painful. It's been so long. It's awful. It's awful. Don't get out too soon. Let the profits run. That's what the hardest thing is. We always do it back-assward. We let our losses run, but we don't let our profits run. And of course, you could fairly say, I mean, and that's obviously a misjudgment on for example, Finger when it was $8-9. I thought it was squeezing. I let my profits run. I mean, so no rule of thumb always works, but in this case, let your profits run. Ward's laughing at your joke. Thank you, Dee, for your positive mentions. Wall Street Wolfie always comes in with positives. I agree with you, Wall Street Wolfie. It's a huge opportunity. I mean, if you're a day trader, it hasn't been great. But this Railtown is the opportunity for people to make back money they've lost in this corrupt market. And once they've made it back, to hold on and get in the green, and then never listen to a story under $5 unless it comes from a legitimate source. I mean, there are stories, but you won't. People here, for example, Wall Street Wolfie, a guy like Julie Kim, she could have $4 million within the next 3 to 6 months value in her account. You know, there's no guarantee of anything, but if the stock were to go to 20 or 25, which I think it is going to, and I hope she doesn't sell, because I think we will adjust our predictions as we know more information. But I think the most likely exit for Railtown is that it's purchased for stock by Microsoft. It could be another company. But once she has that account, she could come back and do some of these Charm Boy stocks, if she really wants to, with just a tiny fraction of her account. So it doesn't matter. She could do it for fun. 10,000 shares, even 50,000 shares would be nothing as a percentage of her overall account. But I hope by then she realizes she's in a whole new category of investor, and she doesn't need to listen to the Charm Boys or get involved in the coordinated campaign to steal entire market caps and destroy companies and shareholders in stocks under $5. So, yeah, I think it is a great opportunity to buy Railtown. Wall Street Wolfie, yeah. G-Bucks, last trade, the bid is 0.087, the ask is 9. I'm not going to go through the history of G-Bucks except to point out to everyone that stock was supposed to squeeze and go to $150. It's now bidding. If you can get out, you might be able to sell it 0.087. This is a classic example of why you don't want to listen to the Charm Boys. If you want to make money, and in fairness to him, you could have made money in G-Bucks. He told you 1 year ago when it was 70 cents, I don't remember the number, he's hearing something from Goldman Sachs. Well, the likelihood that he's hearing something from Goldman Sachs is about 0. But you know Ham is going to work his ass off. He's going to talk about it, and he's heard something somewhere. So you buy it at 75 cents. Of course, if you're a day trader, you didn't wait. But if you waited about, I don't remember, 90 days, 60 days, it went to $8. It went to $10. It went to $12. Well, if you realize that Ham does the same thing every time, and I'm not ascribing any bad motive, I believe he thinks there's going to be short squeezes. Well, you get in early, you let somebody else hold for the short squeeze of 150, you buy it at 80 cents, you sell it at $8, it goes to 12, you say, oh, well, I missed it, I could have made more money. You do that. But Wall Street Wolfie, just to be clear, I never recommended G-Bucks, ever. I traded it, and Ham was on here, you're correct, but I never recommended it. I don't think short squeezes happen. So I guess that's your point. I don't know if you're just pointing it out, but you know, you miss your mark. If you want to call somebody out on G-Bucks, I guess you go to Twitter and do it with Ham. But on the other hand, for people who traded, like I'm sure this woman that now talks to somebody on the West Coast did, you get in early on Ham stories and you don't believe about the pie in the sky numbers. You take your 2x, your 5x, your 10x, and you wait for the next story. It's not a bad way to go. I wouldn't do it. too much risk. But some people made money in G-Bucks. But it wasn't my story, so you miss your mark. Anyone loading up on G-Bucks? I mean, I suppose as a strategy, while it's flat on its ass, you could hope that the whales that lost a lot of money would revisit it if, you know, what are they on now? GDC? You know, if GDC works, where they bribe a long computer and a trading desk, they bring in Univest, you know, bunch of people in Hong Kong and Kuala Lumpur, and that works, and they make it squeeze. Maybe they'll come back to G-Bucks, but I think it's a mug's game. I wouldn't do it. Railtown is the stock to own. There's no need to buy these so-called short squeeze and these manipulated stocks to get 10x or 100x. Railtown's going to give it to people, in my judgment, based on fundamentals, not based on hot money. So I guess you're still in the hot money game, or you're in the shorting game. I don't know. Colby Cormer. Railtown just closed. G-Bucks just closed at 0.0891. Aren't you glad you know that? Finger closed at $1.46. And then Railtown looks like it closed at 0.3012 on 155,000 shares. The volume, that's what it was, 155,000. The last trade was 30. They tried to break it down. Somebody sold. Well, actually, it says 1030. I don't know if that's the most recent trade. But anyway, the high on the day, 31 cents. The low on the day, 30 cents. So, you know, if you assume on 100,000 shares, they were able to nick half a penny out there. You know, it's $500, right? Yeah, $500. That pays for a day's parking, pays for the fees that you give to whoever's sponsoring your trading. $500 a day, $2,500 a week, and that's just on one stock, and you might cover 10 or 20 or 30 stocks. It's better than waiting tables. Colby, good afternoon, Sir William. I doubled my position today. I now have 60. That's awesome, Colby. Awesome. That's fantastic. That's how to act. That's how to treat these situations. I give you great credit. I give you great credit, Colby. That's a great position. And you're doing exactly what you should be doing with Railtown, in my judgment. Obviously, it's not financial advice. It's strategy. Ward Richardson, TELUS has 20 million total telecom subscribers. So 20.495 million. So if you had to guess how many are enterprise customers, 10% of that number is 2 million. Maybe that's too many. So you say 1% of that, 200,000. 1% of 20 million are enterprise customers. 200,000, and they all host. It's big revenue. It's big revenue. It'd be double whatever the network hosting is right now. I mean, it's the upside here is truly large. It's just no one understands it yet. So you're buying while no one understands it. There's a lot of discouragement. There's a lot of people, they screw this, I'm not going to buy anymore. In fact, some people might say, I'll give it one more week. I'll give it to the annual meeting. You know, there may be some of that. They're going to try to print a trade at 27.50. They might try to do it on the opening tomorrow. And but remember, the company is not under the threat from a hedge fund or a toxic financing where they're going to try to take the whole market cap. They're not under that threat. And I'll get to Keith's question, but they don't have to issue any shares either. And they won't. They won't. I mean, I don't know 100% certain, but Future Whale, another pump and dump for your followers to lose money. When will y'all learn? All right, I'll move on from that, and I'm going to delete this guy. E. Bellinger, you only missed the messages from Julie Kim. All right, thank you very much. CJ Yukon, RT is driving me nuts, down every damn day. Yeah, got to get used to it. All we can do is wait. Got to get used to that. Is there any way to kickstart management to actually do something for the show? I think they are. But I mean, I'm not minimizing your reactions, CJ. But I think management is doing exactly what they should be doing for us. Look, I believe the reason closing the AIP deal took so long, and it just closed a week or so ago. Was it the 26th? I can't remember now, but it closed at the end of November. I think the reason it took so long is regulatory, the bureaucracy of the Canadian government / regulators. And I don't know anybody, no matter how talented, how successful, how rich, whatever law firm they hire, auditing firms, how careful they keep their records. I do not know anybody that can speed up a certain kind of bureaucrat. Just don't know. So that was one thing. I think now getting feedback from some people, one person here, it sounds like they have 3 workstations on the administrative side. So it sounds like Railtown doesn't have a lot of manpower to address everything every single day and maybe they didn't make AIP their priority. They left it to the AIP management. I don't know. That's probably a failure of leadership. It thank God they didn't go out and raise $25 million with Jeff Easton so that they could have an entire floor of administrative assistants and executive vice presidents, because we'd now be buried in a toxic deal. So there's two sides of that coin. I also think it's possible, once it got over to the AIP side, that those guys have never set up a public company before. I gave you my opinion that both law firms probably weren't highly motivated to move quickly, but I'm going to leave that alone. But on the AIP side, maybe they fumbled around. Maybe they didn't know what to follow up on, or I don't know. And another possibility is they were getting 100% approval of shareholders. I showed you yesterday, there were 113 of those shareholders with a minimum of $250. If you need blue ink, if you need a FedEx, if you need to send a moose mail to, Flaming Red Bow, Northwest Territories, it might take 2 weeks and then it comes back. Who knows what the delays were really about? But you know the answer, CJ Yukon. The AIP deal did not get closed for, depending on where you start your count, half a year, 10 months, a year. It just didn't get closed. It just got closed about a week ago, which is great. But then on top of that, the great news came out while we were waiting that this huge company, TELUS, signed a deal with Railtown / AIP. We don't know how it all broke down. A month ago, they announced that. It's fantastic. But guess what? They haven't given out any details that allows the lifting of the restriction on buying, because it's material information. The people that are close to the company, including Canaccord, obviously probably know or can be assumed to know information about the revenue that could be generated, which could be massive, and it certainly will be deemed material by a future class action lawyer or attorney who says Mavericks bought the stock because they knew something secret, or BlackRock bought the more stock because they knew something secret, or Canaccord Genuity established a position institutionally because of the secrets they knew. Nobody wants that. You don't want that. You don't want that. TELUS happens to be a Canadian company, which I can say probably without going into any biases, is a different culture than the United States. Corporations in Canada have all sorts of items and issues and concerns they need to address from a government, regulatory, political level that are completely outside making money. So we have to wait probably for TELUS, maybe with Railtown, but we definitely got to wait for TELUS either with Railtown or on their own to release that material information. What's hard to understand about that? What's hard? It's awful. I agree with you. It's awful. But if we look every day, what are you going to do to get TELUS to act? They're essentially a bureaucracy themselves. Are you going to pester them every day? Are you going to call them 3 or 4 times a day? If you're Corey Brandolini, hey, I know you're going to get that news out, but can you give me a status? Well, we've got our crack team working on it, but they're getting vanilla ice cream issued to the Eskimos in Wiggawami, Edmonton. And we got to get a press release out on that. Hey, it's Corey again. I know I spoke to you at 9 a.m. It's lunchtime. I thought I'd check in with you again. When are you going to be able to get the information out on our XYZ, whatever it is, because we don't know, about our relationship with you? Well, as I told you this morning, and I really wish you'd stop calling me. I'm the CEO of the company, and I've given you the name of someone else to call. But I told you this morning we have our crack team working on it, but they have a new initiative. We're going to be sending icebergs to the poor in Somalia so that they can grow some bamboo to build some huts to get through the hottest part of the summer. And we've got to get that press release out. So we'll get to your press release, but we have some things to get to first. Ring, 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 ring. Corey, I told you what's going. Well, I'm sorry to bug you. I know I called you at 9 a.m. I know I called you at 12, but it's the close of business. I'm just calling to see if there's any progress over at TELUS. I know you're a $20 billion revenue company, and we're just a blip on your radar, but this is pretty important to my shareholders. I'm wondering when you can get an update on the TELUS and it's probably going to not only be an amalgamation, it's probably going to be a quadra conglomeration of government and local and provincial and AI sovereignty, and maybe linked in to Katy Perry's latest concert with Castro's son. But anyway, when do you think you'll be able to get that press release? We're ready to go. When are you going to be able to get the details to us? Look, Corey, I told you this morning, we are working on the ice cream to igloos initiative. And this afternoon, I told you, we're working on the icebergs to the desert initiative. But, I got to tell you, we now have an important initiative to supply baby seal pelts to the Inuit up in Alaska because Trump's ignoring them, and we're trying to help the children who are completely ignored, and we're calling it the Seal to Eskimo initiative, and we got to get that out tonight. So look, we'll get to your issue. Ring, ring, ring. Corey, I'm at home now with my wife. What is it? Well, my shareholders are really asking me to do something to get TELUS to follow up on the announcement that you kindly issued with us a month ago. Is there anything we can do? Well, I'm telling you, we have to work with the government and with the regulators, and they really want us to get out a new telecom initiative to help the poor in Central America have access to the internet, and we're going to get that out. You see where I'm going. The priority at TELUS is not Railtown. The priority at TELUS is to honor government initiatives, which now allows TELUS to get government support for TELUS building data centers, and for TELUS, which is a quasi-utility, to get further government support locally, indigenously, provincially, nationally, to be a main cog in the sovereign AI solution. So if you have an idea how you can get the bureaucracy at TELUS to put Railtown at the top of their hopper, I'm all ears. But until then, I'm sorry that it's driving you crazy. It drives me crazy. It really does. My hair was brown before this. But I really don't know what solution I can give you other than we're waiting for, in the case of TELUS, we're waiting for a bureaucracy that's unlike anything you experience in the United States unless you go to DMV or unless you have your cell phone account at Verizon. Otherwise, you don't experience that here. And I don't know the answer of how you speed up a bureaucracy. I really don't, CJ Yukon. That's on TELUS. But what if there's other transactions they're working on? Canada is a big place. There might be other deals they're working on that are material. How are those going to get announced quickly? I don't know. Don't know the answer. And then with those other deals, the TELUS deal at least has the benefit of already passing muster with the regulators. How do you get the Canadian regulators to move quickly? Are they paid off by the shorts? I don't know. I don't know what to do about it. The odds are, CJ Yukon, you're going to go nuts for the next 2 weeks, the next 4 weeks, the next 5 weeks. And odds are that the stock's going to close in the red, although it might be just marginally in the red, day after day. Odds are this stock's going to go to 27.50 at some point. So you're going to go nuts. That's just how it is. And you're going to go insane if you measure your success of this investment over the next days. And I'm sorry, I sincerely apologize for it. If I had known in June, I would have told everyone to leave their money in G-Bucks, leave their money in MTEN, leave their money in Q Quantum, leave their money in Finger. You'd be so much better off. And wait to buy Railtown now. But I didn't know. And I'll tell you, the basic premise for owning Railtown remains the same. Of course, maybe you missed it. But I think Railtown very easily will show 50 to 100 to 150 million in revenue for the forward 12 months, starting in the first quarter. And if you put a multiple on that, your stock, the company, could be worth billions of dollars. Yeah, but how if they can't even get TELUS to help them to get a material information out in a press release? How the hell are they going to run a company that's worth a few $1 billion? They're not. They're going to sell it. Yeah, but if it's so great, why aren't, if TELUS's revenue is going to be so good and they have other deals pending, doesn't somebody know it up in Canada? Wouldn't they be buying the stock anyway? Are you telling me John Ruffalo's going to risk his franchise and his standing in Canada to go buy 5 million shares of Railtown at 30 cents when it goes up to $30? He's going to be sued by a class action attorney who's going to say, you know what? You traded on inside information, and then he loses his house, he loses his business, and he loses his reputation. You think that's going to happen? I don't. We're just stuck. But it's a short-term stuck. And if it's going to drive you crazy every day, I don't know what to tell you. I really don't. I think you have to, you have to pull out a pad of paper, do it tonight over a whiskey, and write down what you think the revenue could be from hosting the network companies that are going to transfer over to TELUS. Write down what you think the conductor business could be in general, however you want to break that out. Write down what kind of business is TELUS going to direct to Railtown. And if you come up with a small number, use that. Let's say out of I gave you, I think, 7 sources of revenue. Screw all my projections. Screw them all. Just say it's $1 million each. 7 million in revenue next year. Well, if you give it the presumption of growth and the presumption that they do indeed have something in the AI space, and you use the Sequoia valuation for whatever the hell, Lang Chain, take 7 million in revenue and multiply it by 80x. That gives you a company worth $500 million, $560 million. Well, I assume if the revenue's that low, they didn't really issue a lot of shares. So let's use, instead of 225 million, let's use 240 million. That's a $2 target, $2.33 at a minimum revenue projection. Just so minimum, it's a joke. But it's going to drive you crazy every day. And you want me to call Corey and get the company to do something, damn it. Yeah. I actually think, CJ Yukon, if the company were to prematurely announce news without cooperation of TELUS, they could forfeit the whole deal. If the company is trying to get into a network of people working in the Canadian sovereign AI space and they don't go carefully, they could be blown out of that. Do you want that? I don't think that we can goose the company to do something for shareholders. I think they are doing it. Look, a year ago, the story, as I understood it, and it's what got me interested, there was a company called Ubiterra, you can look it up, that I had an investor who I wanted to invest in it, but the deal's closed now. I tried the hardest I could to keep it open for him. But the capital just never was available. And when I first had the opportunity for the investment, we could have put in $1.5 million, $2 million. But as time went by, other people put up money and the availability was reduced to $500,000. But then that got taken too. So it's all finished. But what Ubiterra is the third company that the founders of Ubiterra created in the software space for oil and gas development. The first company they created, and I'm going to get the particulars wrong, but the theory's the same. The first company they created, they sold to KKR for 10x on what they raised. The second company they created, a software-based, cloud-based company doing something, I don't remember what it was, and it sold for a big multiple to KKR. So then they came up with this third company, became named Ubiterra, that designed a tool to put on the drilling bit, behind the drilling bit, on the drilling chain. And as the drill bit went vertical and then turned out horizontal and tried to stay in the sweet spot of the zone for 10,000, 20,000, 40,000, 60,000 feet, this would allow both minor visual, but it would allow all this data to be interpreted real time, beamed up to the cloud, and then shared instead of in one big truck or in one big office. It could be shared on any computer, a phone, a computer, a laptop, an iPad, anywhere in the world, in a coffee shop, in someone's bedroom, in the CEO's at dinner, and the engineers out duck hunting. Everybody can get together, put their phone on, have a call, and say, you know what? This looks like there's a fault. We need to adjust the drill bit up 2 feet, but we need approval. But you do it real time. And instead of missing 30, 40% of the target, you're in the zone 95% of the time. You turn tier 2 and tier 3 prospects into tier 1 prospects, which means the bank will give you money to borrow on it. And it also means you're in the zone when you frack, you get much more gas or oil or liquids back more quickly to get a huge improvement in rate of return. So they went with this company from a concept to proving it up to having over 30 oil and gas companies giving word of mouth that this thing is fantastic. And it's shut now, but it will be sold to Halliburton or Schlumberger or somebody, Exxon. I don't know when, but it will be cloud-based software, AI, the whole thing. So when I heard about Railtown and I heard about what they're doing and that Microsoft and AMD and NVIDIA were their clients, were partners. Wow. So you're building software, it's cloud-based, it provides a service, you're going to prove up the concept with a bunch of customers, and you're going to be able to project growth, and it solves a problem, and it's first, and everybody's going to want it. Microsoft's going to buy you. That was a great story as far as I was concerned. But then Railtown met AIP. And you already know the power of AIP. It brings hundreds of millions in revenue from rolling up companies, but it also brings in the hosting revenue and the cross-selling opportunities. And it brings Omers and John Ruffalo. And I'm sure I'm missing something. So it's a great acquisition. It is a net positive extraordinaire to the Railtown story. But you know CJ Yukon, but your brain won't let you process it. You know that these criminals, you know the short position initially. We don't know if it was offset by arbitrage or moved into dark, whatever. But initially, under Reg Show, you know the established short position was 52 million plus in Railtown in the United States, according to Tom Ronk. Of course, we don't know how valuable that information is as time goes by, but we know 52 million shares were sold that do not exist. You know it. It's the same pattern in everything. And you want management to do something about that corruption in the North American markets that is sanctioned by the NASDAQ, by the over-the-counter markets, by the SEC, by NASDAQ, by Goldman Sachs, by Ken Griffin, by Mickey Cohen, by the law firms, the professors, journalism. You want management to do something to fight that so you don't have to go through the pressure on the stock price for the next 2 weeks. I mean, it's a big ask. It's a big ask. And it's a waste of time for management to do something to fight an avalanche or a robotic, a Terminator, a Skynet, unfeeling attack on share prices that no one else fights. Nobody fights it. Why would you think management can fight it? Why? Do you understand that management cannot tell the story until the regulators allow, and in this case, I believe TELUS allows? Do you understand that the management might be in the middle of earnings, which is a quiet period, and they can't say anything, they're not allowed to? Do you understand they have an annual meeting coming up? So to follow the rules, and the buyers have to follow the rules because regulators go after the longs. They don't go after the shorts. So there's no buying. You understand that. There's no buying. What's management supposed to do about the selling? What's management supposed to do about program flashboy algorithmic short selling of stock that doesn't exist? What is management supposed to do? Put out news? They've done that. They put out the TELUS news, which is huge. They put out the Uniserve, which I think is big. They closed the AIP deal. I think that's huge. Did it do anything? No. Why not? Because buyers didn't come in. Why haven't buyers come in? Not you or me. The institutional buyers, the large buyers, the Canaccord Genuity. Research hasn't come out. Why? Because there's still more material information to come out. What the hell is management supposed to do? I don't get it. I think they're doing their best. I mean, I would argue they could have surely have done better on getting AIP finished sooner. And now we're into the holiday season. But hey, we know that. Now, of course, if you take the stock price as telling you something, and your attitude is this stock price is driving you nuts, and therefore you're going to give up and sell it at 25 cents, well, I can see why that's driving you nuts. But you don't have margin on your account. You're not borrowed against it. No one's going to force you to sell it. It's just nuts. It drives you nuts to look at it each day. Maybe don't look at it until January 15th. That'd be one way they get rid of the nuts. And by the way, CJ Yukon, as much as Tony, the tiptoe tiger, he wants to get you thinking that you need to sell it at 80 cents, that you need to sell it at $1 or $1.50. That's my opinion of what he's doing. I don't want to put words in his mouth, but he does his own talking. The shorts want this to be painful, so when the stock gets back to break even, you go, I'm getting out. It's driving me nuts. Well, then you're going to miss out on the stock going to $10. You're going to miss out on the stock going to $30. And you may miss out on it going to $50. Because your mindset is in this nuts. Your mindset is still hot money. It's still day trading. It's still, I want to get out of this so I can go do GDC or whatever the hell. This isn't Railtown. Railtown, I really maybe my photos, I don't have access to my photos. Oh no, there it is. Okay, there it is. It moved. It downloaded. Let me show you this, CJ Yukon. And it doesn't help because you're going to go nuts. It just doesn't help. Last month, according to Mariah Deutscher, LangChain, a startup that helps developers build artificial intelligence agents, raised $125 million in funding at $1.25 billion valuation. Now, CJ Yukon, you couldn't invest in LangChain. You weren't not allowed to. You didn't know about it. And the Fortune magazine, Fortune reported that IVP led the Series B investment round. It was joined by Alphabet Inc., Capital G, ServiceNow Ventures, Workday Ventures, Cisco Ventures, Datadog, Databricks, and others. I thought it was Sequoia. I guess it's IVP. IVP. So I've been wrong on Sequoia. Where did I get Sequoia from? Anyway, let's see how big IVP is. Institutional venture partners. They've got several funds, $7 billion in assets. But I thought it was Sequoia. Where did I get that from? Anyway, so I'm wrong on that memory. But anyway, LangChain was valued at $1.25 billion. Do you see that there, CJ Yukon? It's in a Series B investment. So you weren't invited to invest at a pre-seed valuation. You weren't invited to invest at a seed valuation. You weren't invited to invest in the Series A valuation. Series B valued the company at $1.25 billion. Okay. According to TechCrunch, LangChain generated between 12 million and 16 million in annualized recurring revenue as of June. So they valued this company at over $1 billion based on an estimated annualized revenue midpoint of 14 million. But you can't wait because it's driving you nuts. You can't wait to find out what Railtown's annualized revenue is going to be because it's driving you nuts and you need management to do something now. Well, I would say even if this takes us until February to find out that the company is going to annualize at 14 million midpoint, and it's therefore going to generate, and here's a chart on LangChain, by the way. This is on Railtown, which LangChain doesn't do yet. These are the areas in the green circle, the green square, and the green cigar that I highlighted in yellow. It's called Development Tools 2.0. These are the problems that Railtown solves. And it works with all of these other technologies. It's supra. Maybe it's better. Maybe it's not. Obviously, it drives you nuts. So you can't wait for revenues to be projected in research or in news because it's driving you nuts. I get it. It drives me nuts too. You can hear it in my voice. According to Yahoo Finance, this isn't a perfect number, but the current market cap of Railtown is $44.554 million. Let's assume, CJ Yukon, that in January, let's say by January 31st, that Railtown is able to convince major investors and research analysts that they're going to do annualized 14 million in revenue, 14 million, and it's growing, so that they earn the same valuation as IVP and the rest of those investors gave Langchain. And I'm sorry, I thought it was Sequoia. I'm going to go check my information. That's in my head. I still think Sequoia is backing Langchain. I'll have to check that. So anyway, if you take CJ Yukon, I know it's driving you nuts. You're not going to want to sit down and do this arithmetic. It's just going to drive you nuts looking at the stock. It's always down every day. Well, you're not selling, and I don't think you should sell at 1 or 2 or 3. So what is it? I mean, it does matter. It is annoying to look at your account and it's down. I get that. But let me give you a number that maybe you wait for before you sell. And I swear I thought it was Sequoia, but IVP and these other investors came in at $1.25 billion to Langchain, which does, and I'll show you, right now I'll show it to you. This is Langchain in the middle. This is Conductor on the left. Conductor does all of these features, whatever they mean. MCP, context management, logging, human, visual, tools, all this crap. They do every single one of them. Langchain does 3 of them. Right here. Next page. Conductor does probably all of them, but I left it out right here because I didn't know what light LLM meant. And Langchain does 2 of them. Conductor is a better product, at least according to the investor deck that Railtown put out in November. It's not particularly third party, so you can argue with it. And of course, it'll drive you nuts until you see research that confirms what their deck says. And to you and to me, to everybody, I'm not picking on you, the price of the stock is the only thing driving me nuts. Well, if you compare Railtown to Langchain, as far as we know, that's the only comparable company out there. And I really thought it was Sequoia that led that round, but it says IVF, and then the several other big institutional investors. They valued it at 1.25 billion based on a midpoint of 14 million in annualized revenue. Unbelievable. So what if Railtown comes out in January and annualizes 14 million revenue and it hits that same sweet spot I just showed you, it's better. Let's just play the game. That's 28 times better valuation than Railtown currently has. So let's take 28 times the current price that's driving you nuts. You know why. You know why every day they constantly try to print it in the red. You know why. It's to make you feel nuts. It's to make you give up. You got to have the gumption to say, screw you, I'm not going to sell. I'm not going to drive myself nuts. But it's hard, I know. I'm not picking on, a lot of my frustration is my own. I wish I had money to buy the stock, frankly. I wish I had the equity I had. I don't. So I just got to live with it. I got to live with the lie of the ball. So at 28 times from here, the valuation on Railtown would be $8.70 a share. But it's driving you nuts. I want management to do something, damn it. Another way to look at it is, you know what? I'm a professional investor. I'm not one of those amateurs that's going to demand management do something. I'm going to sit down. I'm going to make my calculation. I can look up Yahoo and see the market cap of Railtown. I can look up this news and see the valuation of Lang Chain. I can do a little arithmetic. And I can find out that if Railtown does just a heartbeat worth of revenue compared to what it could do, it easily could be an $8 stock. And that could happen in the first quarter of next year. But in the meantime, I'm going to drive myself nuts because management isn't doing something. I think we're asking for a lot. As long as management focuses on not signing a toxic convertible note, not raising money down here, and continuing to do great deals like buying AIP, which is a whole different set of revenue anyway. And as long as they stay in the network of sovereign AI up in Canada, the wind's at their back in Canada. And if they can show 14 million in annualized revenue, and they get the backing of these same type people, just 14 million. That's just the hosting revenue from half the companies at an eighth. The hosting revenue could be many times that. But it's driving you nuts. I don't get it. So I think what you do, pull out your computer, get the market, go to Yahoo Finance. And it's not exact because you don't know if they're using the correct fully diluted number of shares, but it gives you close to it. You know the market cap of Railtown's under 50 million. You know that, I think it was Sequoia, but that article doesn't say it, that they funded institutions, Wall Street funded Lang Chain, a startup that's not even as good a product as Railtown at 1.25 billion. So you know it's essentially 30 to 1. Call it 25 to 1. You pick the number. You discount it what you want. And when you're driven nuts by the value of Railtown on the open market, why don't you remember that the computers just keep pressing the bet because they're short term? They're trying to make $500, $1,000, $10,000 a day. That's all they're, and if they can break it, if they can cause you to be driven nuts so that you go crazy and sell your stock, they win. But then if they can build up in you this insanity that all you look at is the price of the stock and you want management to do something, they have you. They have you in your reptilian emotional brain. They own you. And now you're hot money again. And now you're listening to Borders, Benedetto, Ham, day traders, Tiny Tiptoe. And they have you. They have you emotionally. You're not thinking with your brain. You're just thinking with some deep fight or flight part of the reptilian part of your brain, the part that doesn't really think, fight or flight. Me hungry, me eat. Me scared, me attack. Me afraid, me run away. They don't think about anything. So they have you. So now you have 60,000 shares of Railtown, and it's driving you nuts, which I get, by the way. It all drives me nuts. I'm losing relationships. People are mad at me. I'm not minimizing. I'm going through it with you. Every day I'm on experiencing this nightmare. But that doesn't change the fundamentals of AI 2.0, software development 2.0, the wall of capital coming from Wall Street to these companies, the wall of capital coming from the large cap companies, the arms race that's going on, doesn't change any of that. It unfortunately doesn't change the fact that they have 3 workstations handling the paperwork that probably, an entire floor of attorneys, accountants, and assistants, maybe 100 or 200 people would be necessary to knock out. But as I've already pointed out to you, CJ Yukon, that works to our advantage too, because the company hasn't done a toxic financing. It's blown up in the good way in terms of business and paperwork much more quickly and much more massively than they expected. It's all good. It's just drives us nuts in the meantime. We're big boys. You're big. You can handle being driven nuts. You never been driven nuts in your life before? Last time you were driven nuts in GTI, I went to 0. And someone was giving you the bullshit that when it got through receivership, you were going to make a lot of money. But you didn't want to hear it. So you went nuts with that. You went nuts with MMTLP. People telling you that if you did nothing, you were going to make money. Other people telling you that Congress was going to give you a lot of money. And you went nuts with that. You went nuts with finger motion that's going to go to 3,000. And there's other stories. G-Bucks. Nuts with that one. It's going to go to 150. It's 9 cents. But Railtown's not that story. Why isn't it that story? No charm boys. Unfortunately, there is a short position, but it's not a short squeeze story. The company has not signed a toxic convertible note, never has and will not. The company hasn't done a financing with Canaccord Genuity, best of my knowledge, 99% sure. The company doesn't need to do a financing to pay for everything. We know the company's slow in getting paperwork and process done. It's not all their fault. It's partly the bureaucracy, partly attorneys who are great. They're doing the best they can, just like any other group of regulators or attorneys. It's partly TELUS is a big bureaucracy, doing great just like any other group of bureaucrats in any other company in the world. But everything's taking a long time. Does that mean it's taking a long time, therefore it's all bad? No, quite the contrary. The numbers are big. I mean, I'll go back over it with you. The hosting on just 120 million. It could be double that. 15 at 1/8, 15 million. Cross-selling conductor. This is the old one, sorry. That's the old one. I don't want to give you that one again. I tried to go with a lower number. Let me get it. I want to go with a lower projection. So Tony Two-Step doesn't make fun of me. I'm so scared of his making fun of me. Hosting fee. Here, 15 million. The hosting fee all by itself at 1/8 on 120 million, which could be double, is more than the midpoint of Langchain. But that's driving you nuts. The roll-up, the acquire and consolidate of 400 million in revenue. If you just assume they roll up 50 million over the next 12 months. And then just looking at Uniserve, that they've already announced 3,000 corporate clients at Uniserve. If they just convert 15 of those clients to customers of Conductor at 250,000 a year, that's 3.75 million. Just 15 out of 3,000. And if all the other enterprise sales agreements in the pipeline currently are 20 times 250, it's 5 million. And if new, over the next 12 months, as momentum builds, if new enterprise sales agreements are 6 million, 2 a month for 12 months, maybe a little more, 2 a month for 14 months. Anyway, 6 million is the number I used. And we don't assume anything for the hosting at AIP to grow, either via more end users or to just grow. We assume 0. So we just stick with 120 million as their gross revenue that goes to TELUS. We assume that Railtown is unsuccessful at cross-selling Conductor to any of the 5,000 end users in the AIP network. We assume 0. TELUS, which has revenue of 20 billion and a lot of customers, we assume they do not move any customers to their own data center using Conductor. We assume they just do nothing, 0. And we assume there are no other hosting opportunities, and for that matter, no other cross-selling opportunities at TELUS. We just assume 0 for all of that. You can come up with 80 million in revenue that very well could be projected sometime in the first quarter going forward 12 months. Well, if we just use 35x, but instead of using 35x, we use 15x. That's not exactly right. We use 12x. In other words, we reduce it by 2/3. We only use 1/3 of 35x. We come to a target of $3 a share, and it's going to drive you nuts while you wait. I don't know what to tell you. And I'm not picking on you, CJ Yukon. I really am not picking on you. We're all stuck in this hole we're in. But on 60,000 shares, you're going nuts. So you're going to get out as soon as you get back to break even, or you'll get out with Tony two-step at $1 or $1.50. You make a little bit of money, and then the smorgasbord of opportunities you have are going to be the next G-Bucks. And you're going to be in this nutsville for the rest of your investing career. What if we looked at two numbers? At 35x, what if we looked at $9 and $3 in the first quarter? We didn't look at 13, we didn't look at 20, we didn't look at 25. We just looked at 35x. By the way, the Lang chain valuation was done over 75x. But we won't look at that. We'll look at those two numbers, 930 and 310. If you wait till the stock goes to 310 in the first quarter, you're going to have $186,000. Will that pay you for going nuts right now? I don't know. That doesn't seem like a lot of money. I mean, after all, you could have bought G-Bucks at $5 and it's going to 150. You would have made much more money in G-Bucks at 150 if you bought it at $5. Oh, it's 8 cents. What if your 60,000 went to 930 in the first quarter? That's $558,000. You have $500,000. Will that pay for going nuts for the next fortnight? I think so. I think so. So what you have to do, CJ Yukon, you have to look at comps. The only comp we have is Lang chain. I'll put it up again so you can look at it one more time. This is about 5-6 weeks ago. Lang chain, according to Silicon Angle, Lang chain, a startup that helps developers build artificial intelligence agents, a private company sponsored by Wall Street, doesn't have to deal with short sellers, and damn it, management doesn't have to do anything for shareholders, has raised $125 million in funding at a $1.25 billion valuation. Fortune reported today that IVP led the Series B investment. It was joined by Alphabet Inc.'s Growth Stage Capital G Fund, ServiceNow Ventures, Workday Ventures, Cisco Investments, Datadog, Databricks, and several others. Lang chain develops an open source AI, not a vertical VMS software like Railtown. Agent development tool of the same name. The software enables engineers to implement agents with as little as 10 lines of code. That's not Railtown, that's less than Railtown. One of the ways LangChain speeds up development is by providing prepackaged building blocks. Sounds good, that might be great. It's a little bit different than Railtown. And on and on. Well, then we go to the punchline. We go to the punchline. They have observability features, just like Railtown. Other development tasks. And Langsmith, we have other products. But down here, according to TechCrunch, LangChain generated between 12 million and 16 million in annualized recurring revenue as of June. Now, we don't know if they took a June number. We don't know if they took a 6-month number. We don't know if they took 2 weeks of revenue. All we know is as of June this year, the company did an annualized number, according to these investors, of 12 to 16 million in revenue, and that generated a valuation of $1.25 billion. So you sit down, you write down 1.25 billion, you divide it by 44,554,000. You find out that that's 28, 29 times, 31 times, I think it was. No, it was 28 times on 31 cents. You multiply that by 31 cents. 28 times 31, it's driving you nuts. 31 cents is driving you nuts. But you can't do this arithmetic yourself. That's $8.68 target. If you don't believe it because you think, my gosh, there's no way Corey, who can't do anything for shareholders, he bought AIP for you. He didn't do a toxic deal yet. He hasn't done one. And he's not going to with Canaccord. He developed Conductor, which is a better product than LangChain, starting 6 years ago. He hasn't done anything for shareholders. Anyway, you do that arithmetic, it gives you an $8.68. That's just multiplying the comp, LangChain versus Railtown, market caps, valuations, multiply 31 cents by 28, gives you $8.68. But you want to say, well, that's not right because Corey sucks. He doesn't do anything for shareholders. And by the way, the company hasn't done anything. They can't get AIP done. And by the way, I don't think they're going to do 14. You don't think they're going to do 14 million in revenue next year? Nah, I don't think so. What do you think? I think they're going to do 7 million in revenue. Okay, take half of that number. $4.34 in the first quarter. Will that pay for your pain of going through nuts each day? Is the only source of your affirmation or confirmation that this is a good investment is the daily trading price? You know it's a corrupt market. You know that these guys set computers. The computers don't have feelings like you do. Computers don't go nuts. And by the way, when it turns against them, they have attorneys that can keep them out of jail, and they have big funds that can bail them out. And just like Tony Two Steps helped whatever that fund was that got in trouble with AME and GMC, they worked it out over the next 2 years. Beautiful thing. The system has ways of making back their losses, but you don't have any ways of making back your losses because you go nuts. You get emotional. You get pissed off. When are you going to give up on this? Why am I going to give up? Just because the calendar turned to December? Just because they can't get the damn thing done? The AIP done in less than 10 months? I'm going to give up on the fundamentals? Railtown's comp isn't Lang Chain because AIP didn't get finished for 10 months? Railtown's comp isn't Lang Chain because TELUS hasn't helped Railtown put out material information which will allow buyers to come in? Railtown's comp isn't Lang Chain because the other material news that might be out there hasn't been able to be released? Railtown's comp isn't Lang Chain because Railtown might be in a quiet period right now because of earnings and financials and the annual meeting? Is that what it is? Is that why you're going crazy? You're nuts? Because you need confirmation from the shorts? You need the shorts to confirm to you that you made a good investment. Do you think they're going to do that? Do you think they're going to let up on the selling? Do you think they're going to let up on putting pressure on your emotions? I don't think so. So what's the cure? The cure is you take out a pad of paper. You write down Railtown's market cap. It's not perfect. And you put down Lang Chain's valuation. Lang Chain's not subject to short selling. Lang Chain's not subject to shills. Lang Chain doesn't have to put out any news at any particular time. Lang Chain's not subject to regulatory oversight. Lang Chain doesn't have to wait on a bureaucracy. Railtown does, and you know all the reasons. You divide that out. And the difference in valuation is 28x. You multiply 28 times 31 cents. Now this isn't perfect because this market cap might be somewhat off, but you multiply that times the current market price of 38, you get $8.68 per share. And then you ask yourself, how long is it going to take to get to that price? First thing you ask, is Lang Chain mispriced? Or is Railtown mispriced? Lang Chain has the investment of Alphabet, ServiceNow, Workday, Cisco, Datadog, Databricks, and several others. So they might have gotten it wrong because the shorts are telling you that Railtown is a joke, pump and dump. Is that what it is? Or is it the other way around? Railtown is mispriced because the shorts don't let the stock get a breath of air, and buyers aren't there, and the company hasn't told its story for 10 months. And maybe it won't for another month. So you decide your opinion. My opinion, Railtown's mispriced. And Railtown's product is better. There's conductor, there's line chain. There's conductor, there's line chain. Railtown's conductor is better than line chain. So I think this understates what Railtown might sell for. But anyway, going with this number, we get $8.68. But if you feel like, hell, that's too optimistic, you can cut it down. But your next question is, how quickly can it go to that price? When can it go to that price? Is it going to take 18 months to go to Tony Two Steps 80-cent price? It doesn't make any sense. Is it going to take all year to go to 868? I don't think so. What's going to make the price go to that level? I know when they finally announce material information fulfilling their obligation for full disclosure, and unfortunately, when the buyers come back from vacation, unfortunately, it's going to drive you nuts through the winter. And it's really going to happen as the stock loan desk and the automatic sell button on the computers pull back as the buyers come in. And what about research? Well, unfortunately, research is unlikely to happen during the holidays. Going to drive you nuts. That's where we are. But after the holidays, research, buying, revenue projections, how quickly will it go from 31 cents to $8.68? You have to ask yourself. I'll give you my answer. It'll be as soon as one institution starts buying based on revenues and research. And if more than one institution starts buying, it'll happen pretty quickly. Now, I think that'll happen, $8.68 by February, maybe February 15th. Will that pay? Will that pay for your going nuts? I think so, but maybe not. That's $500,000 to you. I think it's awful. Don't get me wrong, but you're talking about having $500,000 potentially in February. If I'm right, and I think I am. What do you see wrong in my logic? The price is down? You know why it's down. The valuation of Railtown, I'm wrong on my valuation. I just showed you that line chain is an inferior product. So I guess, that needs to be proven. Well, let me ask you something else. If Railtown gets to 868 on 15 million in revenue, 15 million in revenue, is that the time to sell the stock, CJ? Or should you hold on? Well, if you follow the Lang chain model, let's use the lowest multiple at 16 million. 1, 2, 5. That's a 78 multiple. Let's use that. What if Railtown instead of doing 50 million projects starting in the second quarter? What if Railtown can project 150 million in revenue? Look what I did here. I showed you 15 million from hosting. That could be as high as 45 or 60 million. I showed you 50 million in roll-ups. That could be 150 million. I showed you the already announced ESAs. I have no idea, but that could be 10 million, 20 million. I showed you additional in the pipeline. That could be 5 million or 10 million or more. I showed you new projections. That could be 10, 20 million. Have no idea. But here, new hosting. New hosting could be add another 20 million. Cross-selling itself could add 20, 25 million. Telus hosting. Telus hosting could add 100 million. 200 million. Other hosting, leave that, I don't have an idea. So this number of 79 million here, 80 million, it could easily be double that. Easily be double that. So what if Railtown were able to project 150 million in forward revenue starting in March? It's not insane. Of course, we got to see it to believe it. We've got to see the research. We got to see the news. But what if they do 150 million? And the multiple stays the same, the comp at Langchain. Your target becomes $86 a share. So should you sell at $8.68 because it drove you nuts and now you feel good? Or the 15 million that this projection was based on goes to 150 million and the multiple stays the same, which is a huge assumption. But if the multiple stays the same, you're at $86. Well, let's discount that. Let's discount that. Because the multiple might not stay the same. Let's take 86.80. How much you want me to risk it? 2/3? 3/4? Let me just take a quarter of it. I'll just take a quarter of it. I'll discount it. I'll discount it by 75%. That gives you a target of $21 a share. Should you sell at $8.60 because it's driving you nuts? Should you sell it when it goes to $1.50 or 80 cents, like Tony Two-Step wants you thinking, because this price is driving you nuts? Or is the fact that the shorts do the same old thing every single mother effing time giving you an opportunity to increase your position from 60,000 shares to 100,000 shares? I don't know. Or leave it the way it is. But I would suggest to you that feeling nuts is the wrong way to look at this. It is a pain in the ass. Don't get me wrong. And it gives me enormous stress every night, every day. But it's the wrong way to look at what we're going through. It really is. All right. Let me get Steve's number, and then I got to answer Keith's question. Wow, good for you, Steve. So anyway, CJ Yukon, I think it is terrible, and I wish I had told you to wait until December. You would have been able to buy 75, 80,000 shares, but I didn't know. But I really think we're being tested to, number one, we don't have a lot of information from the company, but we got a research report. We have an investor deck. We have the interview with Dr. Tom Core. We have Corey's interviews from a year and a half ago. We have some press releases. We have comparables. We have multiples. So we've got a lot to work with, but we have to acknowledge we have pretty broad ranges to project with. So we got to be ready to adjust and tighten our targets. But to be driven nuts by the same old game plan by the shorts in the face of the company not giving us information, not because they're trying to punish us, not because they're not doing their job, although, there's room to argue that they could have done certain things more efficiently, but we're past that now. The key question is, fundamentally, is Railtown first to market, world-class, solving a software development issue, a $300 billion a year target with AI? Has anything changed that? That's the key question. There's no evidence that it has. The second question is, has Railtown destroyed its cap table by signing a toxic convertible note? The evidence is 99% no way. And the third question is unknowable. But the third question is, when are they going to be able to talk about everything, talk about revenues, talk to analysts? And when will that lead to buying from the major buyers in Canada? And unfortunately, the answer to that probably is January. Now, that doesn't mean the stock can't turn around and snap right back before then. But built into the next weeks, possibly, will be tax loss selling. Other people who have gone nuts and are just sick of it and just get out. Hell. If it were so great, there'd be buying, which is not true. I mean, there is some buying. There's clearly some buying. Or there will be continued short selling. But you know what? It could be that the annual meeting is next Wednesday and Corey management is preparing for that. And before that, he's going to have some announcements. We don't know. So I do appreciate that it drives you nuts. I figure it's just a test going on because I'm being tested. And I figure it's just going to get worse, before it gets better. It's just how it goes. I've never in my life experienced something go wrong in an important issue or important client or both that doesn't get worse first. It just It's just always that way. But that's why, CJ Yukon, there are things you can do to calculate what you think the company might be worth. You don't have to use 7580x on 15 million. On 15 million. But you might consider that the company will be able to project 50 million in revenue. And then you're going to say to me, well, the shorts are still selling it. They're obviously telling you the company's not, but it's just not the case. It's just not true. All right, I'm going to answer. I've got a couple of questions. I've got to leave here in 20 minutes. Damn. Let's try to answer the next bridge question. Just because it's a change of topic. And that'd be fun. Just to have a change in topic. October 1. So they got a successful resolution. But what's the well they're drilling? Here's the funding. It's August 21. So they're going to use the capital for the Panther project. Do you know what you do if a Panther calls? You know what it do if a Panther calls you? You don't answer. I might not be able to answer this today, but I'll try. Because I don't know who the operator is. I'll try to get an answer before tomorrow, unless it comes up right now. Panther Bridge LLC. Who's Panther Bridge LLC? They secured the funding. All right. News. Your mama. Thinking. I can't get an answer to the next bridge right now. If I had to guess, they haven't even started drilling that well because I think it would show up. But I'll try to get an answer on that for tomorrow. All right, the other question was Confluent. Let's see, Confluent. I guess it's an AI company. Let's get the news. IBM accelerates cloud drive with $11 billion Confluent deal. IBM drops $11 billion on Confluent to feed next-gen AI. Why? All right. Which one can I open up to read? Let's try Reuters. So it's a 34% premium to Confluent's last raise. What does it value the company at? CFLT. Let's see what the market cap of that is. It's up to $30, and the market cap is, I don't know, $7 billion. $7 billion. Revenue of Confluent AI. $298 million total revenue. For the quarter. It's $1 billion annual run rate. So it's only a 7 multiple. Looks like a good deal for IBM. Well, that's, for CJ Yukon, that's a multiple you could use. 7 times 150 million, for example, which I think is low, but to be fair, if you want to use a comp, that's $1 billion divided by, I don't know, 250 million shares. It's $4.20. And do you see, CJ, by what I do is I take a number that I come up with in a calculation, then I risk it. So I have a $9 something target, risk it by 2/3, and it's equivalent to 7x of 150 million. They're not pie in the sky numbers, assuming that Railtown is going to produce forward revenue. And I think it is. All right, let me answer the last one. Keith, don't they have to raise revenue soon? I was mentioned in a recent not legal video. Well, he does a good job on his videos. I don't watch them, so I don't believe, Jimbo, that I have a lot of friends out there. So I try to have thick skin. But I think Richard does a very steady job on reporting on what's going on at GTII. And for me, I respect that he hasn't quit, that he keeps doing it. It seems to me that he has a goal of helping people, and he's going to see it through, and I respect him for that. All right. I have to answer this question that Keith asked. Let me show it to Keith. Of course, I have to find the what I showed yesterday. I think this is it. And I'll go there. I'm not going to go through the whole filing. I think I have it here. So, Keith, on Friday, Railtown filed their monthly progress report, and it must be posted on the 5th trading day of every month. And they have to give material information that they're allowed to give. So this was Friday. And this is just to show the rest of the form. And then it's pages. It's pages. Here's another part of it. You know, they have 1,200 companies that use it, maybe some individuals. They finished their observability and error tracking tool. They finished SAS data connectors, new things. They finished new things. They're working on this engine, all this stuff. I mean, it looks like the company's doing things. Of course, that could be all the scam if people are going nuts about it. But here, Keith, in this filing, they have to provide proceeds. So 125 common shares were exercised, warrants. That brought in 30,000 for the month. And then 1.157 warrants were issued, exercised, sorry. It says it right there. So $317,000 came in. If you add those two numbers, roughly 350,000 US came into the company in November. That's on top of money that came in October. I don't have it here, and I've got to go. But let me show you one more thing, Keith. Of course, I won't find it quickly, will I? I had it yesterday, and I had it earlier today. I showed you, I thought, earlier today. But all of a sudden, I don't see it. Oh. Let me see if I can find it. I've got 8 minutes. I should be all right. Here. I think that's it. All right, let me add that. All right, Keith, let me show you this. And let me take this comment down. November, they exercised those warrants. That's what we just talked about, or some part of them. Well, December, they're going to have 2.6 million warrants, which actually either happened today or Friday. So let's just use that number. Let's 2612312 times 0.24. That brings in $600,000 US in December. And then there's some more here at 60 cents. Anyway, you see them. This will bring in a couple of million. So December, sorry, that's 26. So for 25, they'll bring in 600,000 this month. And then you'll see January, they'll bring in, I don't know, 1.5, almost $2 million in January. February, they won't bring in that much. Well, that's not true. If you go down here, they could bring in $3 million in February. So my point is, Keith, the company doesn't need to bring in any money. They're going to be self-funding just from those exercises for the next few months. And then you're right, they should get revenue coming in from hosting and perhaps from, the one caution I give is they have 1,200 users, and to date, it doesn't seem to add up to a lot of revenue. We'll find out. We'll find out a little bit more visibility on their revenue flow. But they have plenty of money coming in that they won't have to issue stock. Now, having said that, I do think if they can do a strategic financing, they will. And we might hear about that, but I don't expect they do it down at these prices. Remember, they own the same stock you do. So let me just make sure everybody answered. Richard just pointed out I was watched by a company. That doesn't sound good, but all right. That doesn't sound good. I'm not saying that he's saying anything bad, but I don't know what it means to be watched by a company. I hope it's a friendly, not a bad thing. But anyway, I'm sure he didn't mean anything bad to me. All right, I gotta go. It's a day of, well, I have to do something that I'm trying to be good from now on about. And so I have to be somewhere by 6:30. And so I have to sign off. CJ, you might feel like I overreacted to you. Maybe I did. I'm feeling pressure too. But I really believe it's the wrong way to look at Railtown, as if the stock price is telling you anything. But that's the core decision you have to make. If you believe the stock price is telling you something, and that the delays are telling you something about management, and that this is just like G-Bucks or some other company of that ilk, and that somehow they've missed their window, well, then you got to act on it. I don't think you're right. I think you'll regret it with every fiber of your being. But that doesn't mean Railtown is a riskless situation. It doesn't mean that there can't be disappointments going forward. But right now, I think this is a stock at 31 cents. All the risk is wrung out of it. I can't picture there's any more risk. I think I mean, looking at the chart, it could go to 27.50. They'll try to do that tomorrow morning. But these short-term prices are all out of whack with the revenue, which some of the revenue is highly visible. The hosting revenue's right in here. They'd have to be knuckleheads not to book that revenue. So I think Railtown, when it's compared to Langchain, is 28 times 31 cents. That gives you $8.68. You can say to yourself that you don't like that. You can say it's a $4 target or a $2.50 target. You don't, but this is a direct comparison. That's not perfect because that right there might not be the exact number you use, but that's from Yahoo. That's from the article, and that price is the closing price, and that gives you a target. Then you can risk that. You can say, I'll take 75% of that. I'll take half of that. I'll take a quarter of that. But it's much higher than 31 cents. And then that's based, this top part's based on achieving 15 million in revenue, the hosting revenue. If they can show 150 million, you take 10 times that, you're at $86. But then it's fair to ask, would they get the same multiple at that number? So you might cut that down by 2/3, which is what I did. I took 66% of this off. I just took a third of that, and you got a $21 target. And you're going nuts. I'm going nuts. I can't buy the stock. I don't have any money. That's what's driving me nuts. Anyway, we'll talk tomorrow. I wish each of you peace. I wish for peace around the world. And, oh, here's Colby. Sorry. Contact me, Colby. Contact me on all one word. Of course, I can't spell. This is all one word. Farrand Balanced. FARRAND Balanced at Gmail. Colby, just send it to farrandbalanced at Gmail. Farrandbalanced at Gmail. Farrandbalanced at Gmail. Farrandbalanced at Gmail. And I will, my phone is out, Colby. I can't make any phone calls. Probably until Wednesday or Thursday, if I'm lucky. It may be longer. That's why I'm still putting my Venmo up there. My phone's off, but as soon as hopefully I can get my phone back, I've got to, because I'm late, I got to pay for 2 months. As soon as I can do that, I can call you. But that's the best way, and I appreciate it. Peace, Jimbo, and thank you to Colby. Over and out.